Hello, everyone. Welcome to our investment for Techies in 2022. This is an Innovecs Conference. Let me introduce myself. I am Juan. I'm the Talent Acquisition Manager at Innovecs in Colombia. And today I'll be serving as your moderator. I'm happy to see your smiling faces thanks to such an innovative platform such as Party.space that allow us to make the conference of the future, communicating with one another at a distance of thousands of miles. I have to say that once you're here, you are fortunate and wise because nowadays it is an important skill to manage your investment portfolio. So, as the coronavirus pandemic and the escalation of the war in the biggest European country, Ukraine, demonstrated, a seemingly stable economy can be quickly turned on its head. So, leaving those who weren't prepared for tough times scrambling for income. However, investments will help you stay afloat in rough times, achieve your financial goals, support society's economic sustainability, and allow you to help people and NGOs during challenging times. So, before we get started, I should make a short remark. The information provided during this conference is broad and is for educational purposes only. Nothing published by Innovex constitutes an investment recommendation, and no investment activity should rely on any data or content posted by the company. So, today you will see that investing can be surprisingly affordable, even with startup savings, especially for tech savvy people, owing to their personal knowledge and high compensation level. However, everyone has a different investment strategy that fits their personal and financial goals. There are various investment options with pros and cons that work depending on your work and risk tolerance. So that is why we at Innovex have an investment community that helps Innovexers learn more about issues and areas of investment that best suit IT professionals and bring them up to speed to the current market situation. By the way, to give you further information about our company, Innovex has offices in more than 9 countries. Moreover, we're going to open 2 offices in Eastern Europe and one in Latin region in the near future. So at this point, we're just expanding our operation, which is really great for get more talented people all over the world. And to put you into more context, we work with many different technologies and industries. So we work with supply chain and logistics, fintech, health tech, ad tech, software and high tech, and gaming and entertainment fields. Our teams are evolving and growing rapidly, and there is always a constant demand for skilled and ambitious specialists. So you can browse our vacancies via the QR code on the wall, or just send your CV so we can offer you a relevant position in the future. Well, thus, this is the first international VR conference on investments in Innovex history that will help you grasp new information and network with like-minded people and speakers. So that is why today we have gathered 6 experts with a unique background in their domain. Each of them went through particular investment cases and found the best way to diversify investment portfolios owing to the cut and try method. So today you will take a helicopter view of different investment options such as NFTs, cryptocurrencies, venture capital, angel investments, and more. Uh, Thanks to our 6 speakers who are experts in those fields. So you can feel confident and you can feel really fortunate to have this time with them to participate in these very cool topics. So you can see the schedule on the screen. The time mentioned is Eastern European summertime, and each speaker will have 30 minutes to present their field and its investment opportunities to you. You can ask them questions in the chat or talk to them personally after their speech. So it's important to mention that after the third speaker, which is even Kompan, you'll have a 10-minute break. Then there will be three more speakers. After you will have time until 9 p.m. Again, Eastern European summertime for networking and questions for the speakers. Um, so, well, right before we start, let me give you some tips for using the Party Space platform. So you can use the WASD arrow keys. This is very common for gaming to move around the space. So as you have seen, it is very easy just to get around the space here at Innovecs. So you have access to the main stage, right and left rooms. You will see and hear speakers from any part of the space. Doesn't matter where you are. Also, you can zoom in and see the image and presentation during the speech on full screen. So to do that, just click on the screen and click on the cross button or press escape button to exit the full screen in case you don't want to see it anymore. So important recommendations on the table. So sitting at the table, you have the opportunity to communicate with the cameras on. And when talking to other participants, make sure your microphone is on. So this is the way if you want to interact like within a table to other people. Please note that people sitting at the table cannot hear standing people and vice versa. So if you're standing and you want to talk to someone at the table, they will not hear you if you're not seated at the table. Other recommendation, use the bottom control panel to interact with members. You can show your reaction via emojis. You can view the members list and talk in general chat. You can also take a picture of the conference and share it on social networks if you want. So to do it, press the button with a camera on the panel's right side at the bottom of the screen, and then you can do it. In the guest list, you can see the teleport feature to find and come up to any member wherever they are, which is great. Um, there's also several tabletop games available at each table in our spaces. So you just should select launch games from the menu, pick up the game, wait for others to join, and have fun. So just in case if you need any help, click on the question mark at the bottom of the screen to get help from our technical support team, which will be more than happy to help. Well, let's begin in our investment journey. The first topic will be about cryptocurrency. So it is a topic that has winning the hearts of giant companies, investors, and ordinary people. For example, our speaker, Sergey Zhdanov's global cryptocurrency exchange, EXMO, is used by 100,000 unique traders annually. So today he will prove that crypto is a simple and effective investment. So please welcome Sergey.
Hi, everyone. So I can start now. Is it correct? Yeah, I guess so.
Yeah, thank you, Sergey. Thanks for joining. Um, so the first question is, does cryptocurrency fit those who look for a stable and reliable investment option?
No, it definitely not the best safety investment. I'm gonna cover it later, but what I would suggest, yeah, be careful because this is a very risky investment. That's 100%. Okay, so I think I'm gonna start now. Yes. So I'm gonna cover an interesting topic about cryptocurrencies. And the general idea which I want to bring to you is that cryptocurrencies are not as complex as people tend to think. That's why I have here the title we call at EXMO, it's Uncreepy Crypto. So let's talk about cryptocurrencies. Do you ever used emails? I think you did. Everyone knows how to send an email, right? But very few people understand how it actually works technically. But does everyone need to understand that? I think no, because people just use this technology as it helps them to satisfy the needs of convenient communication. And same for crypto. You do not need to understand the entire concept of cryptography, of blockchain, nodes in every detail. What you need to know is how crypto was designed to help you, what problem it solves. Let's simplify the concept of crypto to its functionality for customers and not developers. So what is crypto? And let's switch from a broader concept of crypto to Bitcoin particularly, which is the mainstream cryptocurrency. So what Bitcoin does? Bitcoin is electronic cash, which allows you to set a wallet in internet and send or receive different amounts of Bitcoin to or from other wallets. That's it. Simple. From customer perspective, it actually works as emails. You send and receive Bitcoins as you send and receive emails. But however, you probably seek more information about Bitcoin before you would consider investing into it. Why is it different from PayPal account or from your bank account where you also can send and receive your traditional fiat money? Remember the key characteristics which Bitcoin has, but fiat money doesn't. So first, Bitcoin is decentralized, and it's, in my opinion, the most important. It means no one controls it and no one can block your transfer or reject it or do a refund. Once you send Bitcoin to anyone, to any other wallet, it will arrive to the destination wallet no matter what. At this point, only, I guess, shutting down the internet could interrupt your transaction, or invention of such a powerful computer which will also hack each bank, Visa, MasterCard, everything. Yeah, so no intermediary, completely decentralized. No clerk sitting in the office typing down your bank transaction, making error, delaying your transfer. All is automated. Simple as that. The second characteristic, which is also very important, is that supply of Bitcoin is limited. There are only 21 million Bitcoins which could ever exist. It's impossible technically to print more. Over time, each Bitcoin more and more valuable as some wallets have been lost and by the owners, and it's impossible to recover them. It's impossible to print new Bitcoins. The supply is limited. It's also worth mentioning that transaction history for Bitcoin is completely public. So everyone in internet can see all the transactions in Bitcoin from its inception. And the wallets owners of Bitcoin are anonymous. It's like, it works like, similar cash in your wallet. If you found a wallet with cash on the street and it doesn't have the ID in it, you can't verify who it belongs to. It's similar with Bitcoin wallets. But as it creates a risk for illicit usage of this brilliant technology, most of the exchanges link customers' identity to Bitcoin wallets. Okay, and let's compare now Bitcoin to traditional currencies. What is actually more complex? Because we've been on the market for 8 years. We've been from the very beginning of Bitcoin during ups and downs, and we see how new clients come, how they see Bitcoin. And the most common, barrier which stops people from investing into Bitcoin, they say, and we did plenty of researches on that, they say it's too complex for me. I don't understand it. And as I gave you the definition, it's very simple. At this moment, you guys understand what Bitcoin is. You really do. Yeah, can confidently state that you understand what Bitcoin is, because it's indeed not as complex. So let's actually look at the example just to show you how the traditional currencies system is much more complex than Bitcoin. Imagine you want to pay for a banana in a store with your Visa or MasterCard. So here is a very short list of all the counterparties involved into this transaction. It's you, your bank, the store bank, Visa, MasterCard, and I'm not even saying about the banana store needs to set up a legal entity in order to open all this infrastructure. It's indeed all very complex. And the bottom line is that each of these counterparties, they may fail, they want to be profitable, that's why they charge fees. And you actually pay these fees. All people pay these fees because they're included into products and services prices. Let's compare how it would look, if you transact with Bitcoin. It's just you, Bitcoin miners, who keep just Bitcoin network running, and banana store. You just do the direct payment to it. And obviously, it's much more simple. It's actually a simplified financial system. Okay, and let's talk even more about how complex is traditional fiat currency system comparing to Bitcoin. Banking system obviously isn't perfect. That actually Bitcoin was created as a response to a financial crisis. In the Bitcoin blockchain, where every transaction since inception of Bitcoin is stored, it is visible to everyone. The reference which was left by the creator of Bitcoin, the reference to the Times article about financial crisis 2009, you could see on this slide, and banks' role in it. I will simplify the biggest misunderstanding about banks that people usually have. When people log into their online personal bank account and see number in it, they think it's actually cash, but it's not. It's IOU representation. It's how much bank owe you, and it's different from bank's actual assets, from what bank actually own. And I want to show you this very simplified example of how banking system actually works. So let's imagine you're a customer of Citibank and you log into your internet banking, see your balance, how much you have with this bank, Citibank. It's highlighted in a circle. But Citibank actually records in its financial statement it's as a liability to you as a customer. It means I owe you this money, but it's different from what Citibank actually owns. And I show here different banks on the right. It's a liability of that bank. On the left, it's the assets of the bank. So with Citibank example, Citibank owes you this amount of funds, okay? And what actually Citibank owns in its assets? It could be securities. It also could be cash at Barclays Bank, another bank. And Barclays Bank records this as a liability to Citibank. And Barclays bank assets are different as well. And it could be like cash at HSBC Bank. Same for HSBC. They have this as liability to Barclays Bank. I will pay it to you. I owe it to you, usually on demand, okay? And HSBC, in this very simplified example, obviously, but it shows how complex the system is and how imperfect it is. HSBC Bank, in its assets, it has like mortgage to a person, let's say Matt. So Matt pays its mortgage every month. This is how cash actually flows into this system. And you could see how what is the long distance between Matt, who actually pays funds, and your balance in Citibank. And if Matt fails to pay his mortgage, HSBC fails to pay Barclays, Barclays fails to pay Citibank. And when you suddenly want to withdraw your cash, you may not be, it could be not possible. Obviously, I have to highlight that with banks, um, your cash at banks usually insured by government to a certain limit. But it actually shows how the system isn't perfect, how many intermediaries are there. And yeah, just comparing this to Bitcoin, like a very simple, because I try to simplify the traditional financial system. Because before joining EXMO, I worked for Ernst& Young, which is a huge financial company. I uh, was years and years in traditional finances before switching to cryptocurrencies. So I try to simplify for you these like examples how traditional currency system works. But with Bitcoin, I actually don't have to simplify it. It's just electronic cash between you and another holder of Bitcoin wallet. If you consider like investing into Bitcoin, you might be interested in the following facts about Bitcoin. So first, Tesla owns Bitcoin. And Tesla, it's a legal entity in the US. It is a NASDAQ listed company. You all heard of it. So on the balance sheets of this like company, you could find Bitcoin. They own it for more than 2 years, I guess. There is a country, El Salvador, where Bitcoin works as a national currency. It works as a legal tender. So all the merchants, they obliged to accept Bitcoin as a payment. You actually can buy banana in El Salvador with Bitcoin. Next is, imagine this, 2 billion people in the world don't have bank accounts, amount of 8 billion of planet population. 2 billion people don't have access to traditional financial system. And I have to highlight that much, less people do not have phones and access to internet now. So internet technology develops much faster than traditional financial system, which means that, in some poor countries, Bitcoin could easily be adopted and work as it in Salvador as a national like cryptocurrency. The next point is that Turkish lira is more volatile than Bitcoin. And it's the funniest thing because during these last 8 years, I've been always told like Bitcoin is very volatile. But to look at other markets now, the Turkey is a very big economy, but its national currency is more volatile than Bitcoin for the last year or so, at least. The next is Jack Dorsey, and I'm a big fan of this person. Indeed, he's a founder of Twitter. He left Twitter to work on Bitcoin adoption as a payment full time. Because I love, if you want, you could see the speeches of Jack Dorsey about Bitcoin and cryptocurrencies. And you could see how he highlights, he spent a lot of time in Africa, seeing how people can't open bank accounts because financial system doesn't cover a lot of countries in Africa. And he saw how people suffer there. So his mission, he wanted to change it. And for me, it's like a huge sign if this brilliant mind, committed to work on Bitcoin, that's indeed huge. And the last 2 points about actually US dollar. Since January 2020, the US has printed nearly 80% of all the US dollars in existence. Imagine that. So US dollar is actually just 237 years old. In terms of, history of humanity, it's actually nothing. Roughly 4 generations ago, US dollar didn't exist, sorry. Nowadays, the world relies heavily on US dollar. Okay, and even though Bitcoin is not fully ready to replace traditional currencies, let's consider how it actually works now. So by many traditional investment institutions, currently Bitcoin is considered as digital gold because no one actually pays for coffee with gold. gold supply is also limited, and you can't create a fake gold. So Bitcoin has everything which gold has, plus Bitcoin could be transferred borderless within minutes, and it doesn't require huge space to hold it in, because you could hold it on a hardware wallet, which is smaller than your mobile phone. And it's important to highlight that the current total market value of gold is 11.6 trillion US dollars. And after the recent fall, the total valuation of Bitcoin is 0.4 trillion. So it creates a 29 times potential for growth for Bitcoin to be equal to gold. This is something actually to consider. Okay, and even though I feel that all this speech, could be heard like rather radical, obviously I can say that even though Bitcoin is great, there are plenty of reasons why it can fail, and you obviously have to consider that because Bitcoin is risky indeed. So traditional governments, they actually want to control financial system. They don't want this decentralization, as they actually will lose their jobs then. And this is why they're not very happy to accept that. But I must say that during the last 2 years, regulations in cryptocurrencies developed a lot. So the most prominent countries, they created the licensing process for cryptocurrency exchanges. So traditional world regulators, they actually accept Bitcoin as a new technology, as a new investment now. They do not ban it, which is the most important. Same for traditional banks. They don't like it. I must say that trying to open a bank account for cryptocurrency exchange is such an issue because banks don't like cryptocurrencies. Also, Bitcoin's issues of low transaction speeds and high fees for small amounts may not be resolved. And there are a lot of leverage in crypto markets, which creates non-fundamental reasons for price movements. I mean, liquidations of leveraged positions, crypto derivatives, all this stuff. You could see the price goes down without any fundamental reason for that. And I think even though it's a risk and it's applicable now, it will not be applicable in the next 10 years because eventually the market's manipulation will be banned and regulation for Bitcoin markets will be developed as well. Okay, and like alternative future, right? I always talk about Bitcoin and like this is not something which could happen within the foreseeable future, but the speed with which the world changes is enormous. A long time ago, it took like hundreds of years for people to adapt technologies, to agree on some things which now looks like always existed. Like 25 years ago, internet started its huge adoption run. Now it's like a part of people's regular life, right? And like today, it's hard to think of the humanity to live on Mars and pay, with Bitcoin for things. 30 years ago, it was hard to think of having the phone which you could carry with yourself, having access to everyone or any information within seconds. And it brings me to my final thought that think long term, like be critical and hedge against the systems which existed for your whole life as you tend not to challenge them because of that. You were born while it all existed. There were generations, which saw the failure of ancient Greece, Egypt, or Rome. And I'm not saying it's our generation gonna see the failure of traditional financial systems, but can we all be sure it's actually not? And my final thought here is gonna be, even though all this information appears to be radical, I'm a risk-averse investor. I came from traditional financial worlds, and I wouldn't suggest anyone investing more than 10, probably 15% of your capital into crypto, unless you want to gamble hard. And cryptocurrency, I actually believe in electric cars a lot. It's a huge change of system which existed for 150 years. And I see a future for electric cars. And I feel that by 2030, most of the cars will be electric. And someone would laugh if you said it like 50 years ago to anyone, or even when just Tesla started, went public. If you would say, in 20 or 30 years, there will be more electric cars than non-electric, everyone would laugh at you. But I think that it's a greatest investment, and it is still a case, actually. I feel that cryptocurrencies are the same, they're just a little behind on that point. Okay, I think I'm gonna finish at this point. I started a bit earlier, so it leaves me some time to answer your questions. So I'm gonna look at in the chat, and if you guys, any of you have any questions for cryptocurrency, Bitcoin, anything, just please text it in the chat. I'll try to cover that.
Well, thank you for your presentation. So yes, here we have Alex asking a first question.
Yeah, so the question is, how do we value the fair price of these assets? And it's actually very interesting. There is a certificate called CFA where we went through this. It shows you how to value traditional investments. There are different ways, like DCF model is discounted cash flow model, like fair value, a lot of that. And I feel that currently, even traditional markets, they do not work this way. And the most important for you with such investments, allocate a smaller part to it. Do not try to predict its price. Just see the fundamental reason why it should grow. It's something I covered recently. Do not try to evaluate the price of Bitcoin. Don't try to build the model average capital rate. Don't do it. It will not work for crypto. Think about fundamental things. And even with traditional assets, how would you value Netflix? Netflix is a great service, and it is down like 75% during the last half a year. So is something fundamental change for Netflix? No, because the market is crazy now. The traditional theoretical stuff, like evaluating the investments, they do not work as good as they worked, I don't know, 40 years ago, something like that. Yeah. Any hope I covered that. Any other questions?
Yes, I have another question. What do you think about today's Bitcoin price, and if you consider this would be a good entry opportunity for those who haven't invested in Bitcoin yet?
Thanks. It's actually a great question. And as you guys probably know that recently cryptocurrencies prices, they fell. And I love it personally because I don't like to talk about cryptocurrencies when they are a buzzword, when they made the articles in the media. I feel like I'm talking, everyone talks about Bitcoin, and yeah, it's not great for me. And it's cool to talk about Bitcoin at this time because fundamentally nothing has changed. Regarding the question about the entry time, what I would suggest, I would never suggest, to, if you have the allocated capital, you consider to invest into Bitcoin. Don't do it like with a single transaction. Try to do it over a time with a smaller part. With this, you would have the average price of the entry. So Yeah, technically, I think it's a good time to enter, but indeed, it's very hard to um, if you plan to invest for a 5 to 10 years, it actually doesn't matter. Entry now, entry in 3 months, it should be fine for you. But if you like want to get out of it in 1 or 2 year, just try to split your capital into small parts and invest over the time, each week, each day, during the, I don't know, half a year. The longer the better. It will reduce your risk.
Thank you very much.
You're welcome.
Okay, people, do we have any other question you may ask before we move forward to our next speaker?
Yeah, I think there are no other question. I just want to say that I'm gonna stay at this wonderful conference for a while. If you would want to talk to me, or if you guys are IT engineers and you're looking for a job, always come to me. Happy to discuss that. Okay, yeah. If you have any questions, just find me in this conference room. I'll be here to hear the next speakers, and we could have a small chat.
Okay, thank you very much. Well, so that was our first speaker. That was really interesting. So if you guys agree with me, choose the smiling emoji. And well, as Sergey said, don't hesitate on asking questions. Like we can just send them up so we can just answer later. Well, so we're moving on. And now I'm really happy to introduce Egita Polanska. She's partner of Wise Guys Fund. Formerly, Egita designed EU support projects in the Ministry of Economics. So that's impressive. And since 2013, she has worked with more than 15 international startup accelerator batches. So she knows the process from A to C. We have really have an expert here. So she will help you understand the startup investment. So thank you very much for joining in, and welcome to our conference.
Thank you so much for such a nice introduction. You have done your research.
Yes, we did.
Good. Yeah, and I'm happy to be here. I will also start sharing the screen, and I hope the story that I'm sharing about the accelerators, and it's a little bit different from the crypto story that we and Bitcoin that we heard before. But I will hope that also this one will be interesting. So I will start the slideshow, and kind of the main, it takes a little bit of time, but I thought about when I was talking to the organizers about what could be interesting, and what we do at Startup Wise Guys. We have this story, and I wanted to share. So I thought how to actually phrase this. I know maybe a lot of you have already thought about maybe becoming an angel investor or looking at the startups. Maybe some of you already work in the startups. And how can you support? And I thought about it from different angles, and I decided that the easiest way is just to share the story of Startup Wise Guys and of us, of me personally, that I also have been part of this process for many years. And yeah, and funny, like at Startup Wise Guys, we refer back to this story of finding diamonds, because the diamonds are the startups. So I will tell you also the story how we find the diamonds among a lot of other things, and how maybe that can help you to understand also better how it is to actually invest in the early stage startups. A little bit about us, maybe, because we have been around since 2012, and I joined the company in 2016. And I think this is also very important because I will talk also about the numbers a little bit later. But when you invest in the startups, the numbers are one thing, but actually the relationship and the story is very important as well. And the wise guys kind of story I wanted to also share a little bit. I hope maybe I don't know if any of you have heard about it, but we're coming from sort of called Skype story, Skype Mafia. One of our first investors also has been part of that story. So, and the main idea why this investor, like investing vehicle or the startup wise guys came back, to, let's say not came back, but was born was just because investors also decided to give back, and the startup founders decided to give back. And I really like that. I also see on the wall of this conference there are three words: innovate, inspire, and care. And I think when you are working with the startup investments and angel investing, these are very, very important words. And I hope that, and we are also living by them on a daily basis. But going, yeah, so this will be the story again, also about the humans and founders behind the numbers, but also a couple of numbers, because at the end of the day, when you want to decide where to put your money and you want to decide how to spend your money, the numbers at the end of the day are very important. And also for us as an investor, even though you will see everything is very much about humans, there still has to be numbers because we are investing. So couple of numbers from our side, and I think it can also represent why maybe it could be interesting for you to listen to us, to listen to me, to our experience. So we have done 36 accelerator batches in total since 2012, and I have also worked in a different accelerator and different investors also before that, which means accelerator batch, for kind of short introduction, is where we kind of invest into the startups and we also help them grow. And I will tell about that, how exactly we do that, and why it's important also in the presentation. But just to give you the numbers, why I said also the humans are important. So we work over the 10 years, we have in a closed network more than 600 founders, so 600 individuals that we have invested in, and it's more than 300 companies. Plus, we also have other mentors and investors in the network. And currently, for those who are also wondering, are we successful? So yes, with our investments over the years, currently from more than 300 companies that we have invested in, 80% of them are still active. And I partly believe that that's the way how investors and angel investors should approach investing as well. You have to help companies to succeed. And we have had 11 exits so far, which is also kind of important number to show. Just to kind of give you a little bit maybe overview with what kind of companies we are working with. So our verticals are software companies, mostly B2B, so business to business. We work with the companies also within sustainability, in fintech, in cybersecurity, and everything that is XR, sort of Web3, augmented reality, virtual reality. And kind of also to give you a little bit of more understanding about the scope. So these are the main regions where we are located as a company. And here we also believe that as an investor, and I would also like to pass this kind of goal or knowledge as well, is that as an investor, you also have to be very mindful, and you have to not only think about the returns just for you, but you have to kind of build and leave an impact in the ecosystems. And that's why kind of we also how we approach the work that we do. And because it's important, if you help the ecosystem to grow, it actually it's a win-win situation for everyone in the future. More returns, more companies to invest, the whole everything kind of grows with you as well. And as you see, we are kind of born in Tallinn, but then we're slowly have been taking over a little bit in the Europe, in different markets. But that said, the startups that we are investing in are actually coming from all over the world. A couple of other numbers. I'm also happy to share the presentation afterwards if someone is interested. So I don't want to spend too much time on looking at the logos. But here you can see we have the 11 exits that are coming from the companies, and the average is the 22x multiplier across all the exits. So we are not disclosing each of individual ones, but I can say that it's very important for us because this is how the investors actually get returns. So imagine On average, from all the exits, we have gotten back 20 times more than we have invested in. And our investors also have invested in us. A couple of more numbers. So we have also kind of invested from several funds, and you can see, and this will also be very important to say that the companies, you can see, for example, we have invested in some of the companies in the earlier stage, and you can in the earlier years, and you can see the return there is bigger. Whereas, for example, from the companies that we have invested a bit later, it's a bit lower because they're still growing. And I think this is important also if you're considering working in the startup, let's say, investment industry, you have to be patient because it's not something that you will get the return in the weeks, months. It will take some years, and that's fine. That's where actually the magic happens. Yes, and talking about the magic, so this is kind of, I wanted to give you a little bit of the overview about what exactly we are doing, why it is kind of why I'm qualified also maybe to talk about like this in the presentation. And now the next part of my presentation is divided into two parts because I wanted to give you a little bit of understanding, and I think this will be also useful. How, if you're considering about startups as a way how to spend your money. So I will tell you how we are kind of approaching the selection of the startups, because at the end of the day, how well you select the startups or how well you know the industry is also how good returns you will get. And then I will also explain a little bit also a bit on the investor side, maybe why it is important, what are kind of the key elements that investors are also looking when they're partnering up with us. And at the end of the day, you can also invest in the accelerators. There are a lot of accelerators also besides Startup Wise Guys out there. So this is a good way if you want to kind of test how it is to invest in the startups. You don't have to go alone because there are partners like accelerators out there, and most of them are trying to do the heavy lifting of the startup selection for you. And you can learn along the way as well how to do it. But yeah, moving into the next part of the presentation. So the magic of the startups. So how actually we select the startups, where to find them, and how to know if they are good, which is a very tricky question. And I think we're still in the process of finding it. But I think from the numbers, we're doing a okay job there. So over the years, what we have kind of learned from our own mistakes and successes is that our winning formula as an early stage investor, and imagine kind of stepping a little bit back, is that if you're an early stage investor, mostly accelerator or an early stage venture capital fund, or maybe a business angel, which means that you don't invest in the companies like I don't know, Uber, Apple. They are already too big, and to invest in them, you have to be in a big VC fund. You have to find companies that are the potential, let's say, Ubers in a couple of years. And it's difficult just to be kind of, and it's not easy, and there has to be several things. So what has worked is for us, this is where I come back to the human side. It's about the values, because it's about the problem solving. It's about finding the deal flow that no one else, because you have to look somewhere. You have to look for those startups where no one else has been looking before. Maybe you don't even know that they exist yet. You have to also invest early on and be patient, because if you invest in, let's say, the companies that are already successful, they have revenues, it's a more safe investment. But then the returns are also, let's say, lower. So you saw that if you invest early on and you hit it right, you can also get 10 times more money back, 20 times money back, and even more if you're very lucky. Plus, if you do all of these things, we have found out that why we are an accelerator is because we want to also help the founders. And hopefully all of this together can bring also the high returns back. This is our community. So these are, just wanted, before I also go into the kind of descriptions about how we actually do it. This is us. These are the founders. Not all of them, of course, are here. I think this picture was taken in the last event that we did, all of us together before COVID. So I think at that time we had 150 startups, and now we have more than 300 startups, almost 700 founders, and we still try to meet each other at least once a year, online or on site, because it's super important and it helps. And this is where I want to come back also with this mindset that if we help the companies help each other to grow, they're not compete. There, some of them, of course, are competing, but most of them are actually growing their business and helping other founders to succeed as well, because at the end of the day that helps everyone and that generates also bigger returns. Yeah, so kind of give you also a little bit from our own experience is this how we actually approach finding the companies, and we call it the diamond mine because of the diamond story, of course. It's very important to find the data before it actually becomes the data. Because if you want high returns, you actually have to find the companies that no one knows exists, and no one actually knows that they will be successful or not. So it's a very high bet, and you have to kind of understand how to do it. With the percentage, you can see this is where we have mostly invested. So you see we are very focused on the Central and Eastern European countries. And of course, we also have we don't have like we have startups also coming from other countries as well, like US, Mexico, Australia, India. But most of them, of course, are coming from the Europe because we know our strengths and this is where we are best at. Yes, and now the interesting part. So you probably have been wondering. So yes, nice. You know what Startup Wise Guys is doing. What exactly? So we find good startups, but how? So if I come in person, one-on-one with the startup, so what exactly as an investor I should be looking at? So, and this is kind of the overview, what we are looking for. And I will also tell you in a couple of slides afterwards how exactly we will do it, but this is sort of what we are looking for. So usually the very first kind of and most important criteria is the team. And in the team, we are looking for ideally technical founders. Again, we're working with the startups, which means they need to be able to code, hopefully, or at least have smart people in the team that can do it. There also need to be people who actually can execute. And it's not always about the education that you have. And of course, it's important, education, experience, but sometimes it's also about how actually, have you done something before? Are you ready to execute as a founder? Are you ready to grow? Are you ready to listen? And as an investor, when you're kind of questioning the startup, you should be able to detect all these different things. And that's why I said at the very beginning that even though we are investors, we care about the numbers, we care about the returns, but to get to those numbers, human factor is one of the most important things. And you can see that along the other two, which of course clearly is product and the market, kind of a very important focuses, like very important things that we also are looking at, the team still has the number one priority for us. And even we have, for example, accepted into the program different teams that are maybe they don't have yet the product, or they are maybe still looking at the market, because that is something that we can work with. But we want to find the right people that are ready to work. But of course, as an accelerator and also an investor, we also have to look at the product and the market, because it's important that the product is there and the market is there. And here the main things, even though a lot of probably people are thinking that if you're building a startup, it has to be something super innovative. It has to be something that no one has found before, which is actually not, it's of course true, but it's not complete true, because you can innovate on a lot of different things. And with the product, you know, there's a lot of similar companies out there, and there's a lot of competition, which is actually a good thing, because it means that there's also a need for the product. So as an investor, you also need to keep that in mind, that it doesn't really matter if the company is in a very competitive space, they can still beat the market. with the right founders. And coming back to the market, this is kind of the third criteria that we are looking at, and it's also very important. But in a very short way, I would say what investors need to look at is how big is the market, because to reach that return of 10 times more than you invest or 20 times more than you invest, you actually have to have a startup that has a potential of selling to a lot of companies. So if they're doing something very niche or very small or very local, most likely you will just not be able to get those returns. So you need to look for a team that has a nice product, but that has also good market, ideally not only locally, but at least regionally, and they can also try to do it globally. And this is what we are working with. This is what is happening in our minds when we are trying to select the startups. And I guess the question that hopefully is also in your minds is, okay, wonderful. Now I know what I'm looking for, but how actually to find it? Because all of these things are they're quite soft, so they're not really tangible. So, for example, how can you check the team? How do you know if the product is the right? How do you know if the market is big enough? Luckily, we have also experience with that. So I'm really hoping that our experience can help you to do that. So, we have a couple of phases how we usually select the startups, and I will give you a quick overview because it's not an easy process, and it's not something that you can read only from the applications. But of course, this is where everything starts. So all the startups submit us an application with a lot of information about based around team, product, market. And to be fair, if you're very interested to see what accelerators are asking for the startups, you can pretty much go to our website. You can go to all the biggest accelerators. Their application forms are available. You can pretend to be a startup and fill it in, but you will get the feeling what is being asked. So, but this is kind of about still around all the three kind of major criteria: team, product, and market. So how do we do it? An application process, I would say the selection process actually is not something that we finish in a day or a week. It usually takes at least several weeks. And it's always started with the applications. So we manage them, we kind of look with them, and we look through them. And the interesting part, and as an investor as well, as you remember from the first slides, I was mentioning that the deal flow, the amount of the people is actually very important. How you find the data that is not even there, how do you know it? So we in this space use a lot of the network. So also, for example, we have different partners in different countries. We attend different events. We attend different startup pitches. There are also business angel networks. So keep that in mind if you're considering to find startups to invest in and you feel like this is something you want to try out. Don't do it alone. There are always different networks, different organizations that help you to do it. And we are also using that because alone we cannot really find all those teams. Once you have the applications, you kind of look at them, and the first review is always within our own team. Our team currently is 60 people. We used to be 5 when I joined the company, but now we do the first review, and there are a lot of different kind of things that we look for. So we also look at we have experts within our team that do the technical evaluation. I'm not a technical expert. For that, we have my colleague who is doing that. He's very skilled in there. We also check if this team is a good fit for us because we have a certain culture, we have a certain value we have certain values as a company, and for us, it's really important. Not only if we see a good potential for the team, but also if it's a good fit for the style how we work with the companies. And you see, there's also a very funny thing at the very last, and I want to comment on that because we're always laughing about it. That it's kind of also one of the unofficial criteria, and I will say it out loud. Apologies for being rude, but we have this only one asshole rule per program, which means kind of explaining again why I mentioned this human factor a lot is that it's really important, and especially in the early stage investments. we have to be able to work with the company. So if we see that the person is rude, they're not coachable, it already kind of strikes out the criteria for the very first and most important criteria team. So this is how we screen them, and usually it takes several calls. We look through the applications. We have several people in our team looking at the companies, because at the end of the day, there is not one person that makes the final decision. And the last part is the selection bootcamp, where we also invite a lot of our experts. So this is again kind of suggestion for those who are thinking to become investors in the startups. Make sure that you are in a good company, because if you're alone, there's no way how you can evaluate all the companies unless you're really good. But then you also need mostly all the investors that are really good and they have this gut feeling, they have gone through the selection process and they have failed on their own many times. And investor has to be ready also to lose the investment at some point if you're kind of investing in the startups, which is a very natural thing. But yeah, so that's why we kind of try to surround ourselves with a lot of experts that kind of checks all the other three criteria. So we ask about if they believe in the business idea, are there real needs, if there are customers, can someone we know could be a customer and can prove something, are there something innovative, because that is still important, and innovation can also be in the business model, it can be in the geography, size of the market. And this is a funny thing because all the startups will tell you that the market size is huge, but then they will give different numbers and not always it is true. So we are trying to check that as well. Quality of the founders and team, and this is mostly happening due to several calls with each of the founder, and this is the kind of the way how we check them. Again, we talk to them, we talk to the founders as they are humans, they respond to us, and it's super important that we, before we accept and select any startup and we make an investment decision, we want to talk to startups at least in Zoom. Ideally, if we can meet in person, we do that. If not, Zoom is fine, and preferably and almost always it has to be with a camera on so we can actually see the human being, how they react. Are they coachable? Are they receptive to the feedback? And as an investor, that is super important. And again, we also check for the motivation, level of commitment, and there are different ways how we can do it. I know some of our experts are very tough. They ask all the questions and that are very provocative, and they try to test the startups, but this is how it's done. So it's a lot of conversations. Mostly, I would say 90% of our decision making is happening over calls or meetings in person. We also check for any recommendations or any references before we make an investment. But this is kind of the process, and it's very, I would say, complicated. And because it's also not an easy decision to make. But this is how you do it. Couple of other things. So maybe before I move, I know that I also have to, I think, slowly kind of finish the presentation. I wanted to give you a couple of other things that are important. And if you're considering to become investors, maybe a little bit about the kind of things that usually, if you are kind of investor thinking about it and you have maybe already looking at the investments and you have heard different things, so I would kind of move forward with some tips and tricks and how we see kind of the main things in the investing process. And as you saw from the slide, sometimes investors and startups, when they talk about the investing and fundraising, you hear the word valuation. So the how valuable is the company, so worth of the company in millions, and also the unicorns are valued in how basically are detected, like how valuable they are. And usually it's kind of I don't want to say a myth, but a stereotype, the valuation is the key. So everything that you do, it's the key, and it's important because that is how you actually work, how you decide with the investment, how much money you are receiving as a startup, how much equity you are receiving as an investor. And of course, investor wants more equity and startup wants more money. And in the middle, there is the valuation. And it's important, but I would also like to challenge this a bit, because not always it is the key. Because I think sometimes investors and the startups forget that it's not always about the valuation. It's not always, of course, it's about the equity. You have to be smart. But then again, and especially I would want to say that investors sometimes fall into this trap, thinking that the lower valuation and the biggest equity will always bring them more returns and more, which is not the case. Because at the end of the day, if you're kind of taking too much and you're being a little bit greedy, we have seen sometimes that the investors are kind of not, instead of helping the startups, they are doing the opposite, because they want to take too much. And at the end of the day, if you own 30% of something that is worth zero, you still own zero. But if you own 3% of something that it's worth million, you own something. You own something way, way, way more valuable than that. So think about it. And I just, of course, I don't have, it's not enough time and it's a long discussion. And I'm happy to also discuss this further on after the presentation. But this is something I would say, keep away a bit from the stereotypes. It's important, but it's not always, let's say, black and white. There's a lot of things in between. That goes kind of together with this innovation. I also wanted to share this quote that it's the first mover advantage doesn't go to the first company that launches. It actually goes to the first company that scales. Again, if you're looking at the startups from an investor point of view, it's important to be the first one, but it's not always the company that wins. So you have to look for someone who is actually can launch and can actually do it several times. And as an investor, you have to keep that in mind, that sometimes it takes a while. And again, coming back, you heard a lot from me about how we actually select the startups, and the relationships matter, humans matter. And this is usually what we tell to the startups as an accelerator. So never be happy just sharing your story. You actually need to learn about your potential funders, potential investors, and if you like to work with them. And I would like to kind of also say the same thing to the investors. Hear their story and learn more about them, especially if you're investing in an early stage. That will be very important, because you will spend a lot of time together, and you have to like to them, like to like them enough to work with them. And this is kind of in the next slide. I can also explain why. Because with Startup Wise Guys, where we believe that an early stage investment, where the success comes from, is actually that we support the founder's journey. It's not about the money. It's not about the money that we give to the founders. We actually help them through different stages. We have our online pre-accelerator program. We have our full-time accelerator, and we also have alumni aftercare, which of course, in certain stages, it comes with the money, which is important. Startups need money, startups need resources, and that's how you investors, we also get the money back. But if you're investing in the early stage, very big component of that, I would also say the big part of the success is the knowledge, the know-how, the experience. Because most of the founders, even though they're super smart people, they have if you choose the right ones, they have experience on their own. They know how to do things. As a human being, you cannot know everything. And this is kind of the power of the early stage investor, that you can help with something. So kind of that is also important, that if you agree with the founder that you are investing, be ready as an angel investor, at least, or a very early stage, be ready to share a little bit of your own journey, share a little bit of your knowledge, share the experience. And this is what will help the founder to also be successful. And this is how we do it. Again, we have a lot of ways how we have done it. And then we have kind of, we have received a lot of feedback also over the 10 years. So we have also improved the acceleration process. We have improved the way how we work with the startups. But I would say that this is kind of where we also, why we are valuing human perspective in our selection process so much, because we spend a lot of time together with our startups, with the companies that we invest in. And if we cannot do that, I'm guarantee you there's not going to be a very nice ending to that. And also it can be that the startup is not successful. So the money and the resources that you have invested in might not work out. And now quickly, I will also move. I know that I am also running a little bit of out of time. I want to also tell the kind of the other side of the story, magic of investors, why it's actually, it's not only about why select the startups, it's also why you should actually be interested in doing that. And I would say, remember, if you're considering doing that, it's kind of the never-ending story in the startup and in the investor world. Startups are always fundraising, and investors are always looking for the funding. And sometimes in the process, both sides forget that it's not a measure of success how much you raise, but actually it's the means to get to a destination of a startup, of a business, and also to you as an investor. It should be a goal, not your goal should not be just give away the money, but actually you have to give away the money to help startup reach the goal. That will bring you also the return. And also remember that I think there's a stereotype that investors are always the fancy ones and the startups are kind of asking for money. I would say that investor always needs the startup as much as the startup needs an investor, because that's how you create the value and create the return. Yes, and you have to be there long term. So in the numbers, that's approximately 5 to 9 years. That's the average kind of average amount of years before you invest in the startup in the early stage and until the exit. So it's be mentally prepared if you're considering this. So this will become part of your life. It's not something that you invest and get returned back. But I think it's if you're thinking about it, I definitely suggest you to think about it because it's worth it. And yeah, maybe kind of couple of final words why investors and what investors are looking for when they kind of consider the startups and maybe investments into the accelerators or different business angel investments is the portfolio diversification. So you sort of see that startups are higher risk, higher return. And if you only invest in, probably it's interesting to kind of see how you can it's a different asset class. It's not Bitcoin, it's not those are not stocks, so you have to be aware of that. But it's also the bonus if you can diversify like that. But you also have to see where you can access the best deal flow, because that will kind of bring this kind of chance of higher return to you. So either you can work in different regions, in geographies, in different verticals. So be sure that there is something that you kind of think about it. It's sort of also important to remember that, for example, if you think about investing in the accelerators or in the early stage teams, you sort of have to de-risk them because it's very high risk, but of course the returns can also be high, but sort of to de-risk it. That's why we as an investor actually chose the path of being an accelerator, because we work and we support with knowledge. And in the longer term, if you select right, you can actually get higher results back as well. And that requires quite a lot of the due diligence part as well. And of course, the best returns is if you know how, and this is kind of the reminder. Think about different ways, and you can also see, for example, we have a lot of learning. If you saw that, for example, our exits are 22x on the average, all of us, the very fund is only 5 times, let's say, has brought only 5 times more than we invested. So you see that it comes comes with an experience. So don't be afraid and be ready to kind of have this mindset that it's not, you will not get the results right away, but you have to actually find the space, surround yourself with people. And I'm sure in time, it's well worth the risk. And also it's comes that kind of, it's important also to me personally, it's of course comes with the results, but it also comes with an impact. Because if you're investing in the early stage, you actually can bring impact to the company, to the founder, and to the ecosystem. And in the longer term, it just will be more like win-win for the society, let's say. And I think that's it. I will stop sharing my screen. I'm sorry if I've taken a little bit longer time, and I'm happy to answer any questions.
Okay, thank you very much for your great presentation. So we have a question from Maria. I'll read it for our public. So it is, what is the smallest ticket for a private investor to invest in a startup? Is it possible to invest with the Wise Guys team? So let's cover these first two, and we have a third question on the same message.
Mm-hmm. Yeah, that is a good question. So usually if you're looking, for example, I will maybe start with the second question first, and then it will sort of help to answer also the first one. So yes, if you're looking to invest with the Wise Guys team, it's possible. We have several funds, and usually it just happens you reach out to us, we talk, and if you're happy with what we're offering, you invest. The smallest ticket for us, usually it's depending on the fund, but usually it's already on the bigger side, let's say 25,000 or up if you are a private investor. However, this is where it becomes kind of interesting because there are a lot of investors who can maybe spend less money than that, and they cannot come up with the 25,000 ticket alone. There are different business angel groups. So you, for example, you can be a group of friends that can create like a so-called syndicate. So for example, each of you put more money and you sort of create a bigger investment. So I don't know if that fully answered the first question because it's not that simple, but there are different ways and different ways how you as a early stage investor could participate in investing. And we're happy, let's say I'm happy to also tell more in private to understand better what numbers you are thinking. And usually the early stage investors are very open to talk and help support as well the new let's say business angels as well.
Okay, thank you. And the third question inside the same message is, how can a newbie private investor join some fund which has expertise?
Yes, that also kind of, I think the first easy answer, well, sort of easy answer, you have to start going to events. There are, depending on the country where you're in or the region, there are usually business angel networks. And of course, you have to sort of qualify to become one, but usually they are also hosting different events that are meant for the new investors. And also as an accelerators, we try to be very open. So for example, if you would come to one of our events and you would like to ask for help, we would either support you or we would guide you in the direction where you can, for example, get this knowledge. So the sort of easy answer, but it's not easy at all. I know sometimes it's kind of try to find those find people who are in the industry, and usually I've seen that this happens also now with investors, with startups. The network and the connections are the most important part. So you have to start with one question and one handshake, and then from there on you move on to the next and more knowledge and more experience.
Understood. Thank you very much. I have one final question for you. So is how can a tech background help techies to invest?
How can a tech background person with a tech background, or
Yes.
it's in startups actually it's super important because I think if you're coming from the most of the startups are building something, well, it's tech. And if you come from the background with this, as I said in the presentation, the one of the most important things besides the money in the early stage is the knowledge. So if a business angel or sort of, let's say, this new investor comes not only with the money but actually with their experience, and they're ready to share their, let's say, hours and time resources and share a little bit of the experience and knowledge and also participate a little bit in the process of building the company. I think this is how techies can help a lot, because a lot of founders, like at the end of the day, you know as much as you know, but you don't know what you don't know. And if there's someone with a new perspective, that is the most important part.
Yes, agree. Thank you very much. And we have a final question from Taras, and it says, "What can you advise people who are interested in investments for primary familiarization in this field?"
Aha, good. So basically, it's someone who wants to do it for the first time and wants to try it out. That's if I understood the question correctly. Uh, of course, you can start coming to different events, and I think just getting to know people I think that's the answer that I already gave. But I think the another interesting thing that you can test it out, and it also requires a little less maybe capital. There are a lot of besides, let's say, accelerators, because it's already a bit more different structure. There are a lot of crowdfunding platforms out there like Seeders, Funderbeam, a lot of other things. And usually these are dedicated also where startups can go and fundraise. They tell the story, they give all the information, and you as a private investor can actually give a little bit of money. So I think here the the answer, which is unfortunately not easy and simple, is you learn by doing, and just starting somewhere and getting to know people and maybe trying out with these crowdfunding platforms will give you a lot of learnings.
Excellent. Thank you very much for your presentation again. And I want to remind you guys that you can come to her and talk one-on-one while we start delving into international capital markets. So thank you very much again. We appreciate your time. Um, so now we're gonna talk on to international capital markets, as I have said. So the primary benefit of investing in international mutual funds is geographic diversification in the investor's portfolio. Um, so the question here is, what are the other benefits of this area of investing? So Ivan Kompan, which is director at Deloitte Ukraine Academy and founder of First Kyiv Investment Club, kindly will agree to to answer this question. Moreover, he has been engaged in finance for 25 years, and he did research in the field of econometrics at Sorbonne University and patented the results of his study in the US. So let's meet Ivan Komban. Welcome, Ivan.
Good evening, everybody. Thanks for having me tonight, and thank you very much for this introduction. You basically covered all my professional life. I prepared a slide which briefly explains my professional past. Yes, this is true. I've been in finance for almost 30 years. So certain things we'll be talking about tonight are based on practical experience, and I'll be happy to share that with you. Today, I'm speaking on behalf of First Kyiv Investment Club, and let me say a few. Well, guys, I hope you can hear me well, and you see my presentation, so there are no any technical problems. And also, we have this chat option. So, if you have any questions, if you have any comments, or if you disagree with something which I say, please do not hesitate to write your comments and ask your questions in the chat, and I'll try to answer them. So let's try to make our discussion as interactive as possible. So the First Kyiv Investment Club, what is that? I founded it 5 years ago. So this year, this fall, we will be celebrating 5th anniversary of the club. And actually, this is a group of people, pretty large group, about 5,000. Of course, not all members are active, but many of them are pretty active. And we get together to discuss various investment opportunities, to share some knowledge, to share experience. And this is very important, because if you discover an interesting investment idea, and you get fascinated by the idea, it's always good to discuss it with somebody else before you put your money into this opportunity, because well, different people have different experience and different expertise, and they will be able to critically assess your idea, and maybe they will save you from losing money. And the other idea behind the club is that there are lots of people with different professional background, people who work in different industries. And if you invest into the stock market, well, you invest in many different industries, and you cannot be an expert in everything. So it's vitally important that you discuss various opportunities with people who are experts in particular industries. So this collective brain, it could actually generate great results, but I'll talk about results of the club a little bit later. And another important thing which I want to mention is that, guys, I'm not trying to sell you anything. This presentation, the only purpose is to share my experience and introduce you to international capital markets. And if you want to join First Kyiv Investment Club, you can do it well easily following this link, and everything is for free. We do not charge people for our services. There is only one request to the club members: please try to be as active as possible. And if you see some interesting opportunities, and if you want to discuss something, please do not hesitate. Share your knowledge and get knowledge from other people, and this will definitely improve your investment returns. Now we can move on, and let me show you this map, which demonstrates distribution of global wealth. And this area marked with dark blue, they show areas where rich people live. And well, no surprise that these are the most industrially developed countries like the United States, Canada, Australia, Western Europe, Japan. But their industrial development, of course, is important factor, but not the least factor is that people who live in those countries, in those territories, they actively invest in capital markets. Look at this diagram. It shows you what do the rich invest in the European Union. And here, if you look at these columns, like stocks account for 29% of investment portfolio of an average European household. Bonds account for 16%. Okay, cash and money market funds, cash represent pretty big portion, around 28%, but it's not cash like physical cash, which you stash under the mattress or you keep in a safe deposit box. This is typically cash in the bank or cash invested in money market funds. Same thing with real estate. Real estate accounts for significant portion of an average investment portfolio, but it's not necessarily physical real estate. You can invest in real estate through real estate investment trusts, and it's much more efficient than buying just an apartment because it's more liquid, much more liquid. And secondly, because through real estate investment trusts, you can access not only residential real estate, but you can invest in industrial real estate, commercial real estate. You can buy a share in, hotel chain or movie chain, whatever. Lots of opportunities. And also, you can hear this column with alternative investments. What are alternative investments? Collection of fine wine or collection of fine art is an alternative investment. But in more traditional, more professional sense, alternative investment would be an investment in private equity fund or an investment in hedge fund. And now if you look at structure of an average investment portfolio in US and Canada, you can see that proportion of stocks and bonds is even higher. Yes, people in the United States, they are heavily, well, especially middle class, are actively investing in the capital markets. And actually, that's an efficient way to create your own pension funds and to accumulate certain amount of wealth. What are other options? I mean, um, actually, I would be grateful if you use chat to answer what do you invest in? What are your preferred investment asset classes? I know real estate, cash, whatever. That would be great. That would be great to know. And while you are doing that, I'll show you what are preferred asset classes in Ukraine. I don't know about other countries, but well, in Ukraine it looks like this. People who are investing for long term, like Warren Buffett, well, many of them keep their money on deposits with Ukrainian banks. Lots of people keep their money under mattress. It's also very popular. Some people buy gold. They buy golden bars at banks and then keep them somewhere in some, I hope, some safe place. But this is not very efficient investment in my view. And also, people like real estate very much and believe that it's a very profitable way of making their money work. And also, there are some aggressive investors who are looking for quick returns. I call them wolves of the Wall Street, and they are actively investing in cryptocurrencies, which became very popular not only in Ukraine and neighboring countries, but also in other parts of the world. But well, I must say that I personally do not believe in cryptocurrencies as an asset class. Well, I believe it's possible to make money investing in cryptocurrencies, but that's a very risky way of making money. Now, let me take a look. Maybe there are some answers in the chat. No, no answers. Okay, just 1 second. Okay, so if you invest in these asset classes, what kind of returns you could expect? Here you can see average cumulative average growth rate over the past 5 years for different asset classes. So if you have invested in Ukrainian residential real estate, your average return per annum would be less than 2%, minus 2%. If you keep your money, just keep your money in the safe place, you will lose nothing, but you will earn nothing. Same if you keep your money on deposit, you will not be able to preserve your capital because inflation is pretty high, not only in Ukraine, but all around the world. Inflation is one of the biggest economical problems these days. So there is no way you can save your money if you just keep it at the bank. If you invest in gold, past 5 years, they're pretty successful for investors in gold. Average return on gold was bigger than 8%, but that's, well, you can make this, you could have made this 8% if you have invested in gold through various financial markets instrument. But if you buy golden bars, you will lose money because spread is pretty high. I mean, spread is the difference between purchase price and sell price at Ukrainian banks. If you buy golden bars, difference between sell price and buy price will be something close to 20%. So that's a very quick way to lose money. And if you invest in capital markets, if you invest in the US stock markets, which is marked here by Standard & Poor's 500 index, which is the main index on the US stock exchange, your average return would be percent. And 6 months ago, it was much higher. It was something close to 14% per annum, but that's only because that beginning of this year was very bad for the stock market and have deteriorated significantly over the first 6 months of the year. So why does it make sense to invest in capital markets? First of all, security. If you invest in, for instance, in the US stock market, you can do it through one of the registered brokers who are registered on the US stock market and whose activity is regulated by the SEC, Securities and Exchange Commission, pretty powerful government body, and this guarantees that their involvement and their supervision guarantees that your investments will be safe. Nobody will take them from you. Second, returns. Returns are high. I mean, investment in the US equity market could generate top returns for you, and I'll speak about it later in details. And the third important characteristic is that investment in the stock market, in the developed stock market, it's a very liquid investment. What does it mean, liquid? That you can buy and sell your investment any moment you want. If you buy residential real estate, if you buy an apartment, and if you need money, and if you need them right now, it would be quite difficult to sell an apartment in few days, or you will be forced to do that on a pretty high discount. But if you own stocks or you own bonds and you need money, you want to convert your holdings in cash, you can do it within minutes or maximum hours. So, and it's not, well, people don't think about liquidity when things are good, when the markets are growing, when economies are growing. But when sentiment on the market becomes sour and people need money, they start selling assets. And it's very important to be liquid and to be able to sell at decent price, at market price, and to do it fast. So investment in capital markets. Well, it has all these great features which I told about: security, high returns, liquidity. So the question is, why don't people massively invest into the stock market? Just my answer: because many people are afraid. They don't understand how these markets, how they do operate. They believe that investment in international capital markets require some specific skills. This is not true. Let me show you one quote. This is actually saying of Peter Lynch, who is one of the legendary investors and who has been in the Hall of Fame of investors for the long time. The guy was managing Fidelity Magellan Fund, which was the largest investment fund in the world. So he said, stop listening to professionals. 20 years in this business convinces me that any normal person using the customary 3% of the brain can pick stocks just as well, if not better, than the average Wall Street expert. And this is true. And this is true. And if you learn more about this stock market, you will find many interesting, many lucrative investment opportunities on the stock market. And I hope you will be able to generate nice return over a long period of time. So the question is where to begin. Where to begin if you want to become an investor in capital markets. Here is the short list of what has to be done. First, think long term. If you want to invest in capital markets, you shouldn't expect that you will make money instantly. If you want to plant a seed today and collect your harvest tomorrow, it won't work that way. You will lose your money. So think long term, set your goals, think about how you want to organize your investment process. You'll be doing everything yourself, or you want to hire an advisor, you want to be trader or an investor, and finally, what to invest in. And now let me give you more details on each of these points. So first of all, let's talk about investment horizon. Of course, many people, including myself, we want everything at once. We want generate high returns instantly. We want to become rich quickly. Uh, it doesn't work. It doesn't. Such approach doesn't work. So if you want to invest in capital market, if you consider this opportunity, think about minimum of 5 years. But in my view, it's better to think about 10 years and to make your investment horizon 10 years long. I'll explain why in a second. But 15 years will be even better. And some legendary investors like Warren Buffett, who is perhaps the most successful investor in the history of mankind, he has certain category of stocks which he plans to hold forever. And that's a great approach. And there is very simple logic behind it. Because don't look at investment in stocks or bonds. Don't consider it a gamble. It's like buying a share. If you want to invest in a stock market, it's like buying a share in a business. If you own a share in great performing business who generates lots of cash and makes you rich, why should you sell your stake unless you need money or you find a better investment? So this is the logic behind investment in capital markets. The other important thing is to set your goals correctly. Here are some possible goals which people pursue when they start investing money in capital markets. And I run this questionnaire through the first Kyiv investment club, and here are the answers. This first goal to preserve and increase previously acquired capital at average return rate of S&P 500. As I said, S&P 500, that's the most popular index on the US stock exchange, which covers 500 largest companies which are traded on the exchange. So that's the most popular goal. Well, some people want to gain new knowledge and pleasure from the process of analyzing securities. This is also true. I mean, about gaining knowledge, because if you analyze companies, and you have to analyze them before you make your investment decisions and before you invest your money. So you learn more about different industries, you learn more about economies, you learn more about businesses, and you get new knowledge, and then you can use your knowledge, this knowledge, in everyday life. It helps a lot. Well, some people want to make living trading securities. Well, it's possible, of course it's possible, but it's not time job, and it's a hard job. But people who can master great knowledge of capital markets can earn lots of money by trading securities on a daily basis. And also, some people are looking for adrenaline. Some people consider capital markets as a huge casino. And actually, I don't think this is a good approach to make some money, but it's a great approach to lose your capital. So set your goals correctly. And why this is important? Because it will impact allocation of your capital, allocation of your assets. And at this slide, you can see different asset classes. That's You can invest in different asset classes, and different asset classes are characterized by different rates of risk and return. And you have to always keep in mind that your potential return is a function of risk. And these asset classes, they differ by rates of return, and they differ by level of risk that you have to accept. Uh, what are these asset classes? First, interest rate. Interest rate, that's a name for government bonds. It's pretty asset class with a pretty low risk, and you can invest in long-term government bonds or in short-term government bonds. But if you invest in US government bonds or European government bonds, you shouldn't expect high rate of returns. Equities. There are also different categories of equities. There are value stocks, growth stocks, income. That's when you buy stocks and expect to get dividends. As I said, there are alternative investments, hedge funds, private equity, venture capital funds. Also, you can invest in debt. Debt, it means bonds issued by corporate bonds, and there are also different kinds of corporate bonds. There are investment grade bonds which are issued by big reliable corporations which have high ratings assigned to them by international rating agencies. And they are so-called junk bonds or speculative grade bonds, companies which have low ratings, and they are characterized by higher risk. And of course, there could be higher return. Also, real assets, you can invest in commodities, real estate investment trusts. I have mentioned them already at the beginning of my presentation. You can invest in precious metals, gold, silver, platinum, whatever, and money market funds, which is actually the same thing as cashless liquid, but it could generate you small return if you invest in money market funds. And here, average returns that you can expect from investment in each of these asset classes. Here you can see average return per annum for the past 90 years. And as you can see from here, investment in equities is it could generate the highest return among all other asset classes. It's 10.5%. And when you think about your goals, when you think about setting your objectives, just general, well, different people have different goals, but one advice, if I may, is that please do not risk more than is necessary to achieve your goals. I mean, if you made a fortune once, don't try to repeat this exercise twice or three times, because you can lose all your money if you take high risk. Typically, when people think about risk reward relationship, they view it the following way: if I take high risk, I'll get high return. Yes, this is true. But if you take higher risk, the risk of losing your money also becomes higher. So if you have already made lots of money, please invest in some asset classes which are associated with lower risk, and there is no need to take insufficient uh, risk. Now, the question is, how do you want to invest? You can do it on your own, or the other option is to delegate responsibility of managing your money to a financial advisor. And there are lots of investment funds, hedge funds, mutual funds, which will be happy to take your money and manage it for you for a fee. And sometimes fees are pretty high, but uh, will they generate high returns for you? Not necessarily. Not necessarily. If you compare annual returns for hedge funds versus average market return, as indicated by S&P 500, the stock market index, here you can see that for the past 6 years, returns generated by hedge funds were lower than average market return. And if you want to to invest for the average return, you don't need any advisor. So again, there are some advisors which are doing great job, and they generate really high returns, much higher than the market average over a long period of times. But there are very few of them, and it's a very challenging task to find a financial advisor who is able to generate returns which are higher than the market. And typically they charge lots of money for their services. There is long queue to hire them to manage your money, and uh, sometimes the ticket is pretty high. uh, really successful money managers, successful advisors, they manage money for wealthy individuals, and threshold for investing in their funds could be as high as tens of millions of US dollars. So I don't know. It's not that I'm telling you, please do not hire an advisor. Do not give your money to professional money managers. You can try, and definitely you should hear to what professional money managers say about the market, what views on the market they express. It's not difficult. They share, many of them share their views publicly. So if you follow them on Twitter or you follow them on their websites, you can get lots of important and interesting information. So listen to professional advisors, to the so-called smart money, but listen with them to them carefully and consider what they say and take your own decisions, because they are not always right. Typically, when you hear to what they say, everything looks pretty logical, very smart, with lots of financial jargon, and but they are not always right. So take your own decisions, think about what they say, and engage your critical thinking before you invest your own money, hard earned money, in particular investment opportunity. So if you want to manage money on your own, what first steps should be taken? First of all, build infrastructure. What does it mean? Open your brokerage account, learn how to operate trading terminal, so you know how to put orders to buy and to sell securities. And there are many different features. I am sure that for techies it shouldn't be a problem. Then transfer money to your investment account. If you have an account abroad, I mean outside of Ukraine, then you can do it easily. If your money is in Ukraine right now, it's a problem because it's not allowed to transfer money outside Ukraine now. But I hope it will change after the war is finished. And once your infrastructure was built, start trading or start investing. And today I will not be talking about investment in different asset classes because we don't have enough time for that. But let me cover one of the asset classes, which in my view represents lots of interesting opportunities for individual investors. And this is uh, these are equity markets, the asset class which have has generated the highest return among all asset classes over the past 130 years. That's a huge market. Global equity market capitalization of uh, market capitalization of global equity markets now exceeds 80 trillions US dollars. That's a huge market. And here you can see the list on this slide. You can see the list of the largest stock exchanges. The largest one is the New York Stock Exchange, NASDAQ, which is the stock exchange which was created for trading shares of technology companies, is the second largest. Also, it's interesting that here Japan is on the third place, and fourth and fifth largest exchanges are Chinese exchanges, Shanghai Stock Exchange and Hong Kong Stock Exchange, and they were not on the list for well, even 10 years ago. But now China is a big growing economy, and Chinese stock market becomes very important, and actually it offers us lots of investor opportunities with lots of risk sometimes, but with high rewards. So why does it make sense to invest in equities? Look at this graph. It shows you dynamics of S&P 500 index since 1925. And here, as you look at this graph, you can see that it goes up. It keeps going up for almost 100 years. Of course, there were difficult times. Unfortunately, you cannot see the effect of Great Depression in 1929 because of scale, but you can see what happened in 2000 when there was so-called dot-com crisis, and when the market for technology companies fell 83% over 2 years. You can see what happened in 2008 during Great Recession. And now the stock market, like first 6 months of this year, was very bad for the stock market. It's the worst beginning of the year over the past 50 or even 60 years. But there have been numerous setbacks. But as if you take a look at this graph, it goes up. The trend is always up. And if you look at these numbers, you can see that annual average return on investment into the US stock market was 10.5% if you measure your return by results of the Dow Jones Industrial Average, the oldest stock market index. It's even higher if you measure it by Standard and Poor's 500, 10.5, and here 10.78%. Even if you adjust for inflation, real return is over 7.5% over the past 100 years and slightly less if you look at the average return for the past 50 years. Why return is so high and why it makes sense to invest in equities? Look at this picture. It shows you like the very brief history of the mankind. It shows you how humans created value and made money over thousands of years. We started here long time ago as a society of hunters and gatherers, and then humans learned how to grow crops. Some of them became craftsmen. They have started to explore the world, and there were different eras in the history of the mankind. But over these tens of thousands of years, people were creating wealth. Companies, corporates were have been creating wealth. And this wealth creation, it was reflected in price of company shares. So if you believe that the mankind will develop further, then it's a good idea to invest in US equities at the average return of 10.5% per annum, because no other asset class has outperformed US equities over the past 130 years. If you believe that the mankind will stop developing, then perhaps you have to buy some, I don't know, salt, bread, matches, buy yourself a nice, comfortable bunker, and wait for the end of the world. But if you believe we will move on, then the US stock market is the great place for your money, which hopefully will generate you top returns among other asset classes. Another question which you have to answer before you start investing is, who do you want to be? You want to become a trader or you want to be an investor? What's the difference? Trader, that's nice picture. You will be sitting in front of 12, 10, or 2, I don't know how many terminals, and watching what's going on in the markets, which is pretty exhausting and not good for your health. And if you want to become an investor, it's kind of Warren Buffett style. It's where you buy a company, you spend time analyzing it, you find a great company to buy, you buy shares of this company, and you hold it for a long time. And here I try to summarize what are the major pros and cons of being an individual trader. First, few words about pros. There are not many, and many of them. Of course, if you trade stocks on a daily basis, then you have a chance of a quick win. You can generate lots of money within one day, but well, you can lose lots of money too, and you have to be prepared for that. And also, you can always demonstrate your social status. You can impress your buddies with some Wall Street jargon on a party and share some war stories from the Wall Street over drinks, etc., etc. But there are many cons as far as individual traders are concerned. First, it's a zero-sum game. And if you trade, you bet, and you bet against professionals. and you bet against Wall Street, the City of London, against big institutions which are much more powerful than you in all senses. And where you will be lagging behind large institutions in terms of technical readiness in terms your equipment that you use and your laptop regardless of how cool it is, it still ages behind professional industry standards. And also, there are no algorithms which can guarantee you wins in this market. Of course, you can use technical analysis, you can employ some sophisticated statistical models, but technical analysis guarantees nothing. It's a powerful tool. It's helpful tool. And even long-term investor use it before making investors just to determine better point to enter the markets. But at the end of the day, it guarantees nothing. And also, when we talk about trading, there is no such thing as compounding. And any idea, any trading idea is short living. If you have even the brightest trading idea, you make a trade. If you are a day trader, it expires over one day. If you are a swing trader who trades over longer periods of time, days and sometimes weeks, it expires over days or weeks. But if you are a long-term investor, you can make money on your investment idea for years or even decades. And finally, trading is very bad for your health because you have to spend lots of time in front of trading terminals. It makes you nervous, and it's a very exhausting job. And here also are some pros and cons for individual investors. First of all, you bet, as I said, you bet on the future of mankind, and this gives you chances to win. You have all technical tools available. You can pick, analyze, buy and sell stocks from any place in the world. You just need one thing. You need internet. If you can get online, then you can trade stocks. Also, being an investor, it doesn't involve high costs. Trading commissions and advisory fees will be very lower. And if you trade on a daily basis, or if you uh, give your money to professional advisor to manage it, says professional advisory fees could be pretty high. But if you are an investor, an individual investor, you have to be patient because great results cannot be achieved overnight. And of course, you need some knowledge. At least you need to have a basic knowledge of accounting and corporate finance because you must know how to read financial statements, how to read annual reports, how to understand and analyze what is written there and make your own conclusions, and finally take decisions on whether to invest or not. But this is realistic, and I would encourage you to pursue these opportunities because you can become an expert and pick winning stocks. And this is another quote from Peter Lynch, the legendary guy who has that average investors can become experts in their own field and can pick winning stocks as effectively as Wall Street professionals by doing just a little research. And to prove this, I want to share with you results achieved by people who are members of the First Kyiv Investment Club. We have our own investment portfolio, which is called FKIC. This is abbreviation for First Kyiv Investment Club. FKIC 11 because we have only 11 positions in our portfolio, one position per one industry. And if you look at the structure of our portfolio, you can see lots of familiar names, or maybe all names of these companies are familiar to you. And let me show results achieved by our portfolio over the past almost 5 years. Well, this year results are not good, which is natural. Well, because markets are falling, markets have been in the free fall since the beginning of the year, but we are still proud that we are performing better than the than the average stock market. If you look at these dark blue columns, you can see that we are ahead of the S&P 500 index, and this is an achievement. But if you look at our results since inception in October 2017, results are pretty good. We have generated more than 17% per annum on average. So our money was doubled for 1 year ago, and I believe this result is good. And I hope once we go through this market downturn and we go through recession, which is inevitable, and you cannot it's typical market, everything goes in cycles, they go up and down, and you can avoid these downs. So you should live through these periods when markets go down, but then markets will go up again, and I'm sure that we will capitalize on collective wisdom and collective knowledge of our club members. And if you want to generate high returns on investment into the stock market, you must follow these investment rules. Well, there are many investment rules, but I tried to summarize here the rules which are the most important from my point of view. First of all, invest in quality companies. Don't chase fancy stories, because there are lots of very skilled salesmen. One of them is legendary Elon Musk, which who managed to sell the market all these stories about Tesla, SpaceX, and other great companies. But I'm not so sure that these companies are really quality companies. We'll see it over the next year. So first of all, invest in quality companies with strong balance sheet, high profitability margins, wide economic moats, companies which will survive for many years, from which will go through different ups and downs on uh, the market, and will make good money for you. Secondly, ignore the market buzz. Don't listen to everybody. There now, if you open internet and just if you write stock market, you will get a lot of different advice and lots of analytics from various sources. But 99% of these investment ideas, investment stories is just the market buzz. So don't listen to it. Base your decisions on facts, and base your decisions on careful analysis. Read and analyze annual reports. They are publicly available. You don't have to pay for them. So pick them up, read them through, and analyze and make your own investment uh, decisions. And don't sell good companies for a quick profit. If you find a gemstone in a lot of dirt, then keep it for a long while. Of course, if you don't need money immediately, then you don't have to make a forced sale, because it's not easy to find a good company. And if you found one, try to keep it for as long as you can and to make as much money as you can. And don't be scared by the stock market volatility. If you find a good company, you invest your money in a good company, just switch off the market. Don't listen to the market buzz. In fact, nobody knows, neither Warren Buffett nor Peter Lynch nor myself. Nobody knows what's gonna happen in the market over the next weeks, months, or years. It can go up and it can go down. But if you buy a share of a good company, if you buy stocks in a good company, I am sure that over a long period of time, you will enjoy high returns. Because if you listen to the market buzz and if you follow various experts who are telling lots of different things on the market, you can be carried away by their stories, and sometimes um, your behavior could become irrational. And and in general, it's it's a dangerous trap because markets can stay irrational longer than you can stay solvent, as John Maynard Keynes said. So that's um, when you look at this quote, you have to think about one of my advices, the one about your investment horizon. If you want to invest into the stock market, try to think long term. Invest money which you will not need for the next 10 years. Invest them, buy good companies, forget about them for 10 years. And I'm sure you will be generously rewarded over the long period of time. And if you want to discuss some opportunities, gain some knowledge on how to invest in the stock market, participate in various discussions, and share your knowledge, uh, you are welcome to join First Kyiv Investment Club. And just to remind you, everything is for free. I am not trying to sell you anything. So, guys, thank you very much for your attention. And now, if you have any questions, I would be more than happy to answer them.
Thanks,
Thank you.
Ivan. Very helpful, all of your information. So yes, we have in the chat a few questions, so we can start by Natasha's. So she asked, are there any personalities that have inspired you through your extensive career?
Well, if you speak about well-known famous personalities, I'm inspired by Warren Buffett, who is definitely the best investors of all times, and I share his investment philosophy 100%, and that's a great way to make money over long term. And also, I was inspired by my first boss when I was 30 years younger, and I joined the largest brokerage firm in the Central of Eastern Europe. The guy who founded the firms and who was my first boss, he inspired me a lot. He was a great guy, and I learned a lot from him. And now, 30 years later, I'm still grateful to uh, how he has changed my life.
Okay, that's great. Let's move to the next question. So it says, in which way war has changed your plans and tactics in terms of investing?
Well, no, I don't think that war has changed my investing style and my approach to investing at all. Because, if you look, maybe it's cynical to say this, but if you look at the stock market, the war is not the top factor which influences investment decisions of money managers right now. Situation in the global economy, in the US economy, and well, plans of the Federal Reserve System, the Central Bank of the United States, they are more important, and they will have much stronger impact on the stock market than the war in Ukraine. And again, if you follow this long-term investment approach, it shouldn't be influenced by the war, because the war, despite all tragic of the Ukrainian Russian war, this is a short-term event. If you invest for 10, 15, or 20 years, and if you plan to hold shares in a good company for decades, then war is a short-term event which can hardly influence your investment decisions. So the answer is not significant.
Thank you very much. Let's move to the next question. What is your mind about ETF?
Well, ETF it's a great instrument. In my view, ETF is an excellent instrument for individual investors, especially for those who do not want to spend much time to analyze stocks, or who do not have sufficient knowledge or skills. So the easiest way to invest in the US stock market is to buy an ETF which replicates performance of S&P 500. This is the only one recommendation which I can afford to make publicly. Typically, I do not recommend to buy anything publicly because I don't want to mislead people. But this recommendation, I can easily give it because if you buy an ETF which replicates performance of S&P 500, you bet on US economy. If you believe that the US economy will keep growing over the next years or decades, then you will make money. Of course, previous results are not any guarantee of future results, but over the past 130 years, the US stocks market has been returning more than 10.5%. So why don't we believe that over the next 10 years or 20 years, we will achieve the same rate of return if we invest in S&P 500 ETF? So that would be a great way to invest your money. Buy ETF which replicates S&P 500.
Okay, great. Next question. What do you think about military bonds? Is it worth investing in? And do you agree with the statement that it is likely more charity than investment?
Yes, I do. Yes, I do. It's more about helping your country than making a profitable investment, because yield offered by, if you invest in military bonds, well, you can get what, 11%, maybe 12% maximum. Inflation is over 20%. So investment in military bonds will not even help you to preserve your capital. But if you have all your money in Ukrainian hryvnia and you have no other options but to invest, you can either invest in military bonds or you can stash your cash under a mattress. Of course, it's better to buy military bonds, but you cannot compare investment in military bonds to investment in the US stock market. Yes, it's more charity than investment.
Okay, thank you. So here we go with the last question. Could you recommend some investment tools to buy and sell stocks?
That's about building infrastructure. You cannot buy bonds and stocks without opening investment account at one of the brokerage firms who are registered on the markets. So you have to do it only through a broker. So just you have to open an account. The most popular brokerage firm among Ukrainians was and still is Interactive Brokers, large US firm. Uh, if you, well, that's actually the only US firm which opens brokerage accounts for Ukrainians. But if you are citizens of other countries, you can open brokerage accounts with other firms like Charles Schwab and other big investment banks. There are many of them. So there are many lot of big uh, reputed brokers which will offer you excellent services. So open brokerage account and then start trading stocks.
Okay, thank you. So this will be the last question before we go to a break. So what are the lowest sums to start investing in stock market?
Again, it depends. If you live in Ukraine, or any other country with restrictive foreign exchange regime. I mean, if it's a problem to send money to other jurisdiction, if it's a problem to get your money out of the country and transfer it to your brokerage account in the US, and if banks charge high fees for transferring money, then it makes sense to start investing from, let's say, I don't know, three, maybe 5,000 US dollars. There are no any formal restrictions imposed by large brokers. Interactive brokers will take any amount from you. They will happily take $100 from you. So like formally you can start with, I know, $10, 20, 50, 100, 100, whatever. But if you transfer money outside of if you transfer money from Ukraine to the US, then Ukrainian banks will charge you a lot. And if you transfer 1,000 US dollars and pay, I know, $200 for that, then perhaps it doesn't make sense. So it's better to start with bigger amounts of money, let's say 3 to 5,000 US dollars, but it's sufficient to start.
Yes, you're right. Okay, well, Ivan, thank you very much for your time and for your presentation. Very helpful. Guys, now we're gonna have a 10-minute break. So you can take a coffee. You can talk to other people on the room. Check our vacancies. We're gonna count 10 minutes, and we will start with the next speaker. So see you in a while. Thank you. Okay, guys, hello again. I hope you're ready to continue because I'm ready to introduce you to the next topic, which is angel investment. So let's talk a little bit about this. Its investors and are known as angels because they often invest in risky, unproven business ventures for which other sources or funds, such as bank loans or foreign venture capital, are unavailable. So, what should you learn about this field? Terezia Jacova knows. So she is the co-founder of Lumus Investment Collective, which is an organization that educates, supports, and connects women to investment opportunities in the CEE region. Teresa hasn't been able to be online with us today. However, she left us a video recording. So if you guys have any questions while we see her video, please leave them in the chat. And of course, we will pass them on to her as soon as possible. So thank you. Let's put attention onto the recording.
Hello, everyone. My name is Terezia. I'm a co-founder of Lumus Investment Collective. That is an investment club for angel investors. I'm here today, but I'm actually pre-recorded up front, so it's maybe a little bit different for me talking to the virtual audience. Nonetheless, I hope the quality will be the same. And of course, if you have any questions to my presentation and to whatever I will be talking, I'll be really happy to take your questions or connect afterwards. So I hope this will not create a barrier. to what I'm saying. So thank you for at least thinking of becoming a future investor. I understood that most of you are, trying to become investors or be better investors or make better investment decisions. I'm really thrilled to have you here. Like every investor that, or every person that decides to become an investor or is even like educating himself or herself in this topic, I consider it very important. Especially in these times, I think a lot of people are searching for opportunities, how to, maybe transfer their savings into investments, avoid inflation, really high inflation rates that we see worldwide. So I think it's even more important topic these days. Just to introduce briefly Lumus Investment Collective, we co-founded Lumus Investment Collective 2 years ago, and our mission is to connect angel investors with startups, and very important mission that we have alongside investing is actually educating angel investors, because when we've done our research before founding investment collective, we actually discovered that most of the women we talked to stated that the biggest barrier for them to invest is actually education, lack of education. And a lot of the people and investors simply need a bit more information, maybe explanation, guidance throughout the process before they actually have the confidence to invest on their own if they decide. So that's why we actually co-founded Lumus Investment Collective, to not only bring investment opportunities, but to actually educate the angel investors on the way. The minimum ticket you can invest with the Lumus Investment Collective is 3,000 euros as an individual person. We already have around 350 female angel investors in our club. It's investors that are, I would say, coming from the whole world, primarily from the Central and Eastern Europe, so Slovakia, Czech Republic. We do have a lot of women investors from Poland, Romania, Bulgaria, Serbia, but also from Western Europe. A lot of these women, however, do not live in Central and Eastern Europe, but most of them, live in London, Singapore, New York, and for them to invest in startups in Central and Eastern Europe is the way to reconnect and maybe give back at the same time. Plus, of course, everyone is joining our club to actually, find like-minded investors and people. Very important to say, we are not only investment club for women, we do have men as well. And we very much welcome men, startup founders, as well as investors. However, our target audience is still women, as we feel that there is much less women investing, and we want to bring them to the same investment opportunities, and we want to increase their share in cap tables of startups. But we do have men in every investment we made. We can say that a lot of our investors are first-time investors, so someone who has never invested in startups before, and thanks to Lumus, they actually done their first investment. So 24 women last year made their first investment with us. So we're really proud of that. In every investment we made, we have a combination of experienced angel investors and first-time investors. So first-time investors can learn not from us, but actually from the experienced investors. So that's very important. Our portfolio companies are in the health tech sector, e-commerce. We do have 2 edtech companies. We have some green mobility, and recently we also invested in, we call it parent care tech. That is not public yet, but we'll hopefully announce the investment soon. And we are processing some more investments at this moment as we are speaking. So today I would like to bring you maybe an overview of basics of angel investment and give you maybe some practical advice and tips on how to actually think about angel investing, maybe how to start, where to start, or what to consider before you decide to do an angel investment. So let's see. Before you start investing, this is what I remind investors every time. Make sure you have a cash buffer, at least 6 months of living expenses before you make any investment. You need to have your cash buffer and stabilized financial situation for at least 6 months. We recommend investing gradually, not only in startup, but of course in all types of assets. There are rather starting with smaller amounts and diversifying the portfolio. So different types of assets, different types of sectors, maybe countries, regions. So you diversify your portfolio as much as possible. Even though you're expert in a specific field, you do want to diversify your portfolio. When we talk to experienced investors, this is what makes their portfolio the most successful, the fact that they diversify their portfolio. So always keep this in mind. Well, as I mentioned before, education is the biggest barrier for women to invest. That's why we consider very important to actually educate people on investing. 45% of women say that they don't feel educated and confident enough to start investing. And 82% of women think they need to have proper education, background, and knowledge to start investing. So actually learn how to do the valuation themselves, how to evaluate the startups, etc. So we try to provide as much insights and value here as we can. Why is it important to invest for women? I'm not saying that it's not important for men to invest, but there is a gap between men and women when it comes to earnings and when it comes to investments as well. So for women, it's even more important. First of all, because of the gender pay gap, women are earning less. Therefore, you should be able to invest more to, have at the end of the day more money, or at least the same amount of money as men do. Unpaid labor is something that we often see with women. So, work that is not being paid that women have to go through. Career gap, of course, because of maternity leaves, because of, for example, in the COVID, we seen that women were staying at home and could not progress with their careers. Therefore, they are decreasing not only their salaries but also savings for their retirement and pension. In general, worldwide, women have lower state retirement than men, also because of the reasons that I mentioned previously. And very important, women have longer lives than men. So that means that you should be able to have more money because you live longer. These are main reasons why we try to motivate women to come into the investment world. About 2/3 of women do not believe they will have sufficient state retirement benefits, so they are actually aware of that. But only 8% of these women know how much they need to save and invest today in order to have a pension that they want to have. So, if you're doubting, always imagine yourself as an old retired person, what you want to do, where you want to go, and I believe you will find out very quickly why you need to invest and not just save the money. Savings are of course good. I'm not discouraging you from saving, but of course there's a low interest, if interest at all, depending on what kind of account you're saving. Inflation rates are huge now. Savings don't make return, and it's not a long-term strategy. Just to put a bit more perspective on where angel investing is within the whole asset classes. So it's important to mention that angel investing is an alternative asset class. So it should not be your primary investment. So I understand that a lot of people have either, cash investments, or they most of the time invest in stocks. Exchange traded funds, ETFs are quite popular. Mutual funds, not so much in our region, but are very popular. Bonds. And then we have alternative investment assets such as real estate, I think very common for people. Then crypto, hedge funds, and then venture capital, private equity, and angel investing belonging to the same category, or commodities. All these alternative investments say that they should not make more than 10% of your investment portfolio. So just to see where this lies within the whole investment portfolio. If we talk about angel investing, it's an investment that is somewhere in the very beginning of an entrepreneurial journey of a company. So when a company starts, when someone is starting a company, most of the time they start with self-funding, so with their own savings, or it's self-funded, and there the angel investment can start. So you can find a few angels or maybe one angel that, you know, put money on top of your self-funding. Most of the time it comes in the stage of proof of concept. So we call it the seed stage. There often angel investors also co-invest maybe with some friends and families of the founders of the business. And then angel investors often also take place in early stage. So you see it's the release stage. That's where angel investors are coming together with the venture capital funds, as well as maybe some family funds, and crowdfunding is also quite popular. And then you see, well, later stages, angels are not present in these stages anymore. It's more for larger funds and private equity funds until, well, the IPO, so the sale. So this is pretty much, the first two stages, pre-seed funding and seed funding, is a stage that we are talking about. These are the stages where angel investors are taking place and are very important. So as you can see, angel investors are very much in the very beginning of entrepreneurial journey. So that means a very, very high risk. That's why we're talking about alternative investments. On the other side, for the very high risk you are taking, you are also remunerated better than anyone else who joined the company later on. So that's your upside. So angel investing in essence means that you're betting on people very early on. As you know, it's very difficult to validate the business in the very beginning. You are most of the time believing the person or the team that is founding the company rather than the product. Of course, looking at the product and the market is very, very important. But essentially, we say that it's always about people and betting on people, even though it sounds like a cliche. It's true, I can confirm. You do not invest in ideas. Please never invest in an idea. If someone comes like, hey, I have an idea, you should always make sure that, you know, there is some traction. It can be that, you know, a survey was done or a proof of concept, basic prototype of the product. You know, the company doesn't have to be earning money yet. That's not like a prerequisite for angel investors, but there are other types of validation for angel investors. For example, same goes for the person. You never invest in one person, but try to invest in a team, because the fact that someone convinces the other person to join the team, even maybe for free or for low salary, means that, you know, it's a certain kind of validation. So do not invest in ideas and one man show or one woman show. Network is the key here, not only for sourcing your investments, but also for helping the companies to grow further. Angel investing is often connected to technology companies, which is true, and that's most of the times this is the case. On the other side, I do know angel investors that have invested in non-technology companies, in rather traditional businesses, and that's okay, and that is still a good type of investment and can be rewarding. So, you know, if someone comes to you with a non-technology investment, that doesn't mean you cannot become an angel. You're investing your own money. Normally the tickets start with, well, in Lumus we start with 3K. I know some investment clubs that start with 2,000 euros, but most of the time it starts with 5K and goes up to 200,000 euros. You can either make a loan to the company, so you know, it can be repaid to you at certain terms, or very often and more often what happens is that you invest the money as an equity, so you actually you end up owning a part of the company, of course a minor share of the company. You don't want to become a majority shareholder in the company, but that's, you know, that's something that the company, the startup, gives you in return for your money. And as I mentioned before, diversification is always the key. Keep that in mind. So we recommend lower tickets and more companies. In the long term, when we talk to angel investors that made large profits with their portfolios, startup portfolios, they say that this was the key: lower tickets and more companies. So you can either invest as an individual, or you can invest as part of syndicate. So you create a group of angel investors, and that's what we call a syndicate. As an individual, that means that you know, source the company or someone recommends you the company. The company maybe comes to you that they need the money. They know that you are interested in this particular field, or that simply you have free cash that you are willing to invest in startups. It can be very quick. So you know, that's actually also your role, to be quick, to not to be in the way, because angel investors are there in the very early stages. You have to rely on the documentation that you either you prepared or some other lawyer prepared, you know, so that could be a bit tricky, maybe even more risky. So it's good if you know, have your own sanity board or opinion board, or maybe someone like knowledgeable in the field, or maybe a lawyer, or you know, your advisor, just to consult with someone else. But as I mentioned, it can be very rewarding. I know single angels became very successful when investing in companies in the very, very early stages. When you decide to join a club such as Lumus or other investment clubs in the region or elsewhere, you invest alongside other angels. In our region, you don't have to be qualified angel investor. That means that basically anyone can join an investment club. In comparison to, for example, Israel or US, if you would like to join an investment club in the US, it can be more difficult because you have to declare your earnings, etc., to just make sure that you know, you have a cash buffer, and then you're investing on top of that. It's good to invest alongside other angels because you're, you know, it's de-risking everything basically. And on the other side, what we often see is that the network, the people that you are investing with can actually become really crucial for maybe also other parts, you know, of your individual business, or you know, for anything else you do in the future. So so this is quite good. We actually also see some angels that invested with us, you know, became kind of like business friends, you know, and they're doing other things together. So that's quite cool, because you can actually really you know, get new valuable network. If you're investing in a syndicate, it's much easier because us as Lumus, we provide legal documentation and support. We do the negotiation on behalf of the syndicate. But on the other side, it can take time because, of course, you have to, you know, wait for every angel to, you know, agree. Most of the times, the angels are, well, quite quick, and you know, they are not troublemakers, as you could say, you know, because they join the club or syndicate because, you know, they want it to be easier for them. But it can happen that there is always, you know, this one angel that, you know, has more questions, or is hesitant to sign the documentation, or you know, is somehow like backing off, and then it can be, you know, lengthy, and all the other investors have to wait for this other investor. So basically, if you're investing as an individual, this is the process. So you find an opportunity, you evaluate it yourself, you set the investment terms with the founder, you know, whatever you want and whatever the founder wants, you agree on it, you know, you give the money, sign, you send the money to the startup, and then, you know, you make some kind of shareholder meeting, you know, based on your terms. When you invest in a syndicate, you can see there are more steps. We find an investment opportunity for you, we analyze it, you know, we bring you our expertise in what we think about investment opportunity. You can always, of course, seek an external opinion. We collect the money from the investors, and we create an SPV. So pretty much we put all the investors together under one roof. We create SPV, which is special purpose vehicle, where all these investors are united with some rights and responsibilities. So we do not invest in a startup as individuals, person A, B, C, D, but we are company A that invests into the startup. And then when it comes to reporting and communication, maybe it's also a bit more formal, because we really want the startup to report to us, you know, to give us an overview of what's happening with the money that we invested, how the company is performing. You know, we do annual like accounting of this, etc. So so this would be maybe the main difference between the individual investment and syndicate. And then talking about the risks, we can never talk enough about the risk of angel investment. It's very risky. We remind this to our investor with every investment. Angel investment is a risk. You don't have a guarantee of return. There is never a guarantee of a return. You should invest only the money you don't need access to within 5 to 10 years. 10 years is normally the maximum that the company should be able to exit and sell to other investors or larger corporates, etc. There is also a risk of reputation, of course, because you're investing in very early stages. You don't know, what the company, like the journey the company is taking on, the entrepreneur, what he's going to do on the way, how the whole company culture is going to evolve, etc. So this is very important to also consider, like, who you're actually investing into. And then again, diversifying the portfolio. Not enough diversification can be tricky. On the other side, I've seen angel investors that only invested in 1 or 2 companies in their sector, that they are experts and they made a lot of money with that. So, that can happen. Very important, of course, to talk about not only just the risks, but also the rewards. As I said, angel investing is rewarding. So we are talking on average return 2.5 times of your investment. When we are talking about the unicorn companies, you probably might have heard about them. That means that you are making 10 times and more your money. That's what every angel investor is, of course, aiming for. Statistically, there is always just one company in your portfolio that is making this 10x plus. But there is this one company that is making it, so that's good. You're changing someone's maybe life. You're investing into entrepreneur, maybe in your area, maybe in your region, in your sector, and that you're investing into technology or company that can change the world. That's very important to consider. You often learn on the way, and you broaden your mind with what a company is doing. You get to live the entrepreneurial journey, even though you might not be entrepreneur yourself. That's very exciting because you're actually there with the entrepreneur. You can be really hands-on, helping the entrepreneur. You see everything that the company is going through, and it's very exciting, I must say. You're building relationships not just with the founders and with the team, but also with other investors, maybe with the follow-on investors, etc. For many investors, this is a way to actually use their experience, knowledge, and network that they built up in their previous careers, or in their current careers. You actually can use and leverage the network and help this entrepreneur by meaningful introductions, etc. And that means a lot. You actually can even become an advisor to this. You can have a formal board seat, if you really have the knowledge and network in the particular sector. And as I mentioned, for many angel investors, this is a way of giving back. And last but not least, of course, you are increasing your wealth. You are doing it to make money. And as one of our advisors say, don't forget to have fun with it. Angel investing is really fun. It's a lot of ups and downs because we are talking really about early stages of of companies, of startups. But it certainly brings a lot of fun as well on the way. So what is very important before you start investing? Set up your objectives. First of all, financial objectives, and then personal objectives as well, because you're investing as an individual person, your own money that you earned with your hard work. So when it comes to the financial objectives, you should simply, make a financial strategy. I want to invest $20,000 this year, or I want to invest in 5 companies this year, or I want to invest in 2 companies in educational technology this year. Simply make an objective that you follow this year. And then personal objectives should be something like how much time you want to devote to this. Do you want to be more active in the companies, or would you like to actually source the deals yourself, or would you like to join the club and be more maybe of a passive investor, so you receive opportunities and you decide whether you like it or not. How much time you actually want to spend on managing this this investment, because you should consider that it's also time to that you put into evaluating the companies. Of course, also when it comes to like tax statements, etc., you need to consider these investments when you're doing your annual taxation. And often people think of their personal investment thesis, so they either invest in something that they're experts in, or they invest into something that they are really passionate about, but they never had a chance to work with, or they might be really interested in investing in like specific, cause or sector. So it's okay to build your personal investment thesis and to follow this one, so it makes sense to you. About the forms of investment, how you can actually invest. So there are three basic types of investment that you can make into startup. It can be debt, so it's a loan. It can be debt that eventually becomes an equity under certain terms, very commonly used now. It's called convertible loan agreement. So you convert the debt into equity. Very trendy, very effective, I would say. And then traditional equity. So you give the company the money and they give the shares in the company. Equity, I think, is the most common when it comes to angel investing. So what you should know here, two important numbers: how much you're putting into the company and what's the valuation of the company. That's why equity investments take also maybe a longer time than other types of investment, because you often negotiate the valuation. You need to establish the value of the company, and sometimes there are different views of how much you value the company and how much the founder values the company. So basic example here I put for you. Let's say you're investing $50,000 into a company, and the pre-money valuation of this company, you agree that the company is valued 1 million, that the value of the company is 1 million. So if you put $50,000 into this company that has a valuation of 1 million, the post-money valuation is 1,050,000. So how much do you get in this company? 4.76% of the company you're owning. Basic calculation. Convertible loan agreement normally happens if you cannot really establish the value of the company. So you believe the company has a value 800,000 euros. The company believes that they have a value of 1 million. So then you say like, okay, let's not negotiate the value of the company here. I give you a loan now. And once you reach certain milestones, you agree what it is, either, amount of sales or amount of customers or amount of employees, like you develop like achievable, but still like, milestones that are somehow ambitious. And then once the company reaches these milestones, you can convert your loan into equity. You don't have to, it can be still repaid if the company doesn't reach the milestones. And this normally happens in some kind of like in between stages. We call it bridge loans, or like with smaller tickets. So that's actually very popular at the moment. And then just coming to an end, like once you make an investment, how should you manage your portfolio? Well, as I mentioned before, you should make it clear to yourself whether you are passive or active investor, whether you would like to be actually involved in, companies management, making introductions, following the company, checking regularly on the company, formally or informally, or whether we'd like to just receive, a statement once in a year and then be done with it. If you take a board position, if a company offers you a board position, it's a very serious role, so you should really devote time to it. You can be remunerated extra financially for that, but you should really take this role seriously, because that can be so beneficial for the company, for the startup. So your time is the gold there. Very common mistake that happens to angel investors is that they focus on companies that are going bankrupt, that are having problems, and you already see that it's really difficult for them, to come out of the problems, and you spend your time helping them. That's wrong. You should be focusing on the companies that are actually winning, because as mentioned before, your time is gold, and statistically there will be companies in your portfolio that will fail, that will go bankrupt. You should identify this very quickly, and do not waste your time on these companies, but focus on the winners, because that's where you can add value and maximize your investment. Make sure you set up some kind of reporting system with the startup, either quarterly. What we do is mostly we receive monthly reporting, like in email, but then we also do like quarterly or by like twice a year or once a year, like a personal meeting with all the shareholders and a startup. It's like larger meeting. You can do also informal meeting if you want, depending on your on the needs of the company. I think you should try to have a good relationship with the company, very open relationship with the company. It should not be just about the reporting, but the founder should be able to really ask you like, hey, this month I need help with, I would like to have introduction to clients that could use our product. I would like to have introduction to a person that could help us with financial planning for next year. Do you know anyone like that? Could you recommend someone like that? It should be an open relationship like this, that the startup really uses, your knowledge and your network and your experience. You should avoid investing in companies that are competing with each other. It doesn't really do good blood in a portfolio, even though I know investors that done this. But general rule says you should not invest in conflicting companies. And then, of course, do not forget about your personal taxation. And then everyone is looking for exit. Of course, that's when your money are actually coming back to you with the return. So we call it a liquidity event. It can either become through acquisition, so someone acquires the company. It could be either a larger investor, it could be a corporate, it could be a different company, buying a smaller company. Acqui-hire is that the company is sold also with the employees, and the employees or the founders continue working for the company. So it's an acquisition plus they like hired people, or the key management. IPO is of course something everyone is looking for. It doesn't happen that often, but does happen. So that's when the company is going public and selling their shares on a stock exchange. Some shares could be sold just partially, so you could only sell your shares, or part of the investors could sell their shares. There can be a larger investment round, so a larger investor comes, let's say like a private equity fund comes, and they buy shares of all the angel investors and VC funds. So this can be one way of making your money work. Sometimes it happens that founders buy back the shares, that they decide to have it as a family business, or that they simply do not want the investors anymore in the company. Or company can merge with other companies, so either with a competitor or with a complementary company. And then of course also one way of cashing out these dividends. So that's again something up for discussion with the company, but it is a way to liquidate your investment. And then who gets paid first? Debt holders, of course, the ones that are providing a loan. Then preferred shareholders, so that's normally the angels, VC funds, and after that comes founders. So this is also kind of an upside, that's there for people who put money as first in the company. And then you should not forget, as I said, 1/3 of your portfolio will fail or will go bankrupt or will not make any money. And it's not, ending just like that. You actually need to properly close down the company. It costs time. It costs some money to actually close down the company. And often there are some emotions involved with this, and you should be prepared for it. We say that investment is like a marriage. So it's kind of a divorce that can be painful at times, or you just might feel personally sad for the founders or for the company. So you should also be prepared that there might be some costs on the emotion side as well, but that's very normal. And that would be it from the basics of angel investment. Thank you very much for your attention. I hope this was helpful. I hope this has raised some questions in your head, and very important, I hope that this made you motivated to invest, or at least consider joining an investment club or invest as an individual. I'm here for your questions. Please feel free to reach out or join our club directly.
In emoji, and in case of any questions, write them down in the chat, and we will be happy to share the questions with her and answer a bit later. So now we're going to talk about putting money into early stage companies or startups companies that show potential for long-term growth, which is venture capital investing. So to help you figure out this topic, we have invited a CFA charter holder, which is an investment professional with a solid understanding of advanced investment analytics and real-world portfolio management skills. So please welcome Emilia Stasio. She's the COO and co-founder of Artscapy, which is an online platform for collectors. So Emilia is currently managing a portfolio of venture capital investments within the B2B and B2C spheres of technology-driven financial services and fast-growing digital marketing, retails, and SaaS solutions. So thank you for joining us and welcome.
Yeah, hi. Thanks for having me. Great to be participating in this conference. Yeah, I'm glad to share some of my thoughts. Let me see here if I can get the screen sharing going. One moment. There we go. That should be sharing it. All right. And okay, all good. You can see all things on my screen.
Yes.
Then okay, great. Okay, great. Thanks so much for confirming. No. So I thought this chat I would focus a bit on thinking around, also thinking about investing in art. So by way of background, the chat will be a bit about my background and then going into a bit of looking at art as another alternative asset class. I'm happy to connect with people also offline as the organizers were mentioning before. I've been in venture capital before. So I was an investment manager at a family office for about 2.5 years before I jumped across the pond, let's say. Is it not working? Let me see a moment. You cannot hear me. Is it working?
Yes,
Okay. Yeah, it's hard to tell at the same time. Let's see. Okay. Okay, great. So why don't I jump in here then? So a bit by way of background then. So my journey started in finance. So studied economics, both in my bachelor's and my master's. And then I basically gone across the spectrum really. So I've been at the European Central Bank for a while and also the European Banking Authority. So working in public sector. So looking at the financial sector and doing both quantitative analysis and that's forecasting and research in the public sphere before I jumped over to the private sector. So I was a forecaster at Moody's for a while. So I was the lead researcher on Brexit at the time, which was quite an interesting project to be involved with, trying to predict how things will go. But after that, I started to look at and think about not just how do markets move, but why do they move? So what are those things that are driving the changes in the economy, and specifically thinking about innovation, which brought me into looking at startups. So I got quite interested in looking at technology startups, and based on that experience of running quantitative research and looking at different investment opportunities, I later joined a family office as an investment manager. And I got plugged into the tech ecosystem, as it were. I was part of a global accelerator, and I later joined as a program lead of the Startup Leadership Program, which is a great resource for anyone who's interested in perhaps running their own thing or want to learn more about the startup life and the way to run a startup. So whether you're interested in maybe investing in startups or have a project or idea of your own, I would recommend that. So I was part of that as well, and then I'm also mentoring founders at UCL and a couple of other places. So this a bit sets the stage. Throughout this time, I've always been interested in art as well. So I've always been going in museums, galleries, and started to collect art quite more actively since about 2015 or so. So it's been quite a few years at this point. But along this journey, we made quite a few mistakes. So things that were bought that were overpriced, understanding the difficulty of getting into the art world. So building off of these ideas, we had an idea to, rather than just observing some of these issues and problems and experience these frustrations, we said, why don't we try to solve them? So fast forward to today, about some year and a half, 2 years later, we're now running a fast growth company, which is Artscapy. So it's a platform for art buying specifically. And we're also running Thirdblock, which is helping businesses and brands access Web3 solutions. So this is kind of my background. Again, this talk now, I thought about focusing more on thinking about art as an alternative asset class, maybe art as investment, especially considering the previous talk, which was all about angel investing and looking at the options that you'd have to personally get into investing. I'm happy to discuss also journeys into venture capital and what that looks like and what some of those things look like in that sphere. But I'll jump over to art for now. And so as a primer now, well, thinking about the environment that we're currently in, right? So no one has gone untouched of the ongoing war, which beyond all the human and emotional losses that have happened in over this period, which of course are invaluable in every sense of the word. I mean, also the pure, let's say, financial estimations are quite staggering. So we're looking at something like 600 billions was the last estimate I've seen from early May for the cost to Ukraine, and about $500 million per day for Russia. These are just what the financial estimations are telling us. So of course, these have all kinds of ripple effects throughout the wider economy, which is causing further uncertainty. On top of this, we have an environment of high inflation, as everyone has, I'm sure, felt at this point. So just to give a bit of a background there, so what has caused it? Why is this happening? What we've seen is because there was a very fast reopening after COVID restrictions, where at least you had this massive boom out of demand, spending, people coming back, while supply chains haven't been able to adjust in time. So that means that when there's higher demand, businesses have had an easier time to raise prices, but still keeping their customer base. So you have that as a push on inflation. You also have higher energy prices. So any input price, not just the kind of things that we observe as consumers, so gas prices, electricity, this sort of thing. But then all those things, of course, are also raw inputs into production. So as input costs rise, that means that trickles down through to the final product. Hence, we see also higher inflation push from that. Finally, what economists like to talk about is this idea of the base effect. So the base effect means that because inflation is typically measured year to year, year on year, because prices, as you can see also in this graph here, they were kind of exceptionally low and slow moving at that point. So comparing a low value of last year to very high value this year means that the change is even bigger. So that is also adding to the numbers game here. So you have all these factors going on, which then is causing all kinds of further market uncertainty, which means that people are looking for things to invest in. So what are the options in that case, right? So one argument, of course, is the contrarian investing. So now, arguably, there can also be a good time to buy. The trickiness is, of course, timing it right with the market. A lot of people will say, you know, markets will still continue to go down, stocks will continue to fall, crypto is all over the place, as we know. still there can be an opportunity to get into the game there with the hopes that you bought it low, so then when it's going to go up again, you're in a good position. Or looking at other riskier assets, so other investment areas with a higher risk but also higher return, or finally other kinds of alternative investments, which basically leads me to the idea that I want to go a bit deeper into today at this stage. So as you can see on this graph here, this is showing the global market, one of the estimations. So you can see it's been quite stable over time. So this is one of the benefits of the art market, is that art as a value on its own, it tends to be stable or rising, historically speaking. Just like the same, we would say that investing in any kind of stock is a risky business, but overall, on average, tends to go up. So it's the same thing for art. Now, there comes a lot of caveats with this. I think art buying can be an interesting thing to get into. I personally don't buy art for investment. Of course, it's a financial transaction. It is something to look at as an alternative asset class, but there are many caveats that come with it, right? So art is very liquid as an asset, contrary to what it may seem in a heated auction. A lot of things go unsold. They go at a lower estimate. So if you're trying to sell something, for example, in an auction, of course you're hoping to play into the idea of animal spirits, if you will, and the movements of the room, and people wanting to get that piece, and that can push up the prices. So we see the kind of big results that then grab headlines. So you had the World a couple of weeks back, and I'm sure you've all seen People, and my colleague Diana will talk about this later. But this doesn't happen all the time. So art can be quite illiquid. It's hard to sell it at the right time, at the right value. Market forces, again, are extremely irrational. So if normal markets, they say stocks and other kind of asset classes, are difficult to predict as such, art can be even harder because it relies on basically subjective opinion a lot of time. So why this certain piece is valued more than another has a lot to do with the place in art history, has a lot to do with how different subjective opinions of the art world have assessed that work or that stream of works, which then of course leads to the conclusion of saying all art isn't made the same. So it's not like a stock where you can look at, okay, what's the discounted cash flow, another investment, what's the discounted cash flow, is it under or overvalued, can I apply a standard financial model to understand the market positioning of this asset. It's very hard to try to do this for art. Still, what I would say anyway, art tends to either hold its value or go up in most cases of the time. But then in that case is what I would lead with the caveat of saying, you know, it's not necessarily an asset class that you should invest in with the hopes of a fast return or fast gains. Still, having said that, in terms of just looking a bit at the art market as such, stable value, the market is heavily skewed towards the US. China and UK are also big markets, while we then see that the market has fully recovered to pre-pandemic levels. So unlike many of the other markets that we're looking at now, of course, they are very shaky. People are holding back. You have either stagnant growth or no growth or in decline in certain cases, while art, we don't see this. So perhaps it can be a good time to enter the art market. So with this idea then, if we want to look at art, how can I buy art regardless of where I'm sitting? It can be useful, and how do I find the right kind of pieces? So a couple of the options then can be to go, of course, to art fairs, but there are over 300 art fairs happening every year. So even if you try to go to all of them, it would be physically impossible. So which ones to go to? You would need several days to kind of fully explore them. Still, they help you acquire the kind of taste you'll need and the kind of eye, as it were, to understand what kind of works are interesting, what fits your personal tastes. Then you have the local galleries, and some market data shows us there are over 300,000 galleries in the world. Again, how are we going to visit all of them? Knowing which ones are the right ones and what they have available there, of course, depends on what's the current show that they have on, what are they currently promoting, and also how to access that kind of work. Then in terms of online, I put here one because actually this is something that makes sense in terms of how we're thinking about Artscapy. So what we discovered is the online art market isn't yet fully developed. As such, there aren't many sites that are focusing purely on the buyer. There are a few online marketplaces, but they tend to be not curated, quite overflooded. Still, it's hard as a new entrant to know where to go in and to buy meaningful works and knowing basically where to start, right? So these kind of online marketplaces, very little to no interaction with the galleries or the sellers. So this kind of setup is what drives us to seeing how Artscapy can make a difference and how that might be a tool to help to buy art. So then what is Artscape in a couple of words? It's basically a platform for art buying. So imagine it as a secure asset management specifically developed for art. So the way you would manage your investments online, of course, yet the same kind of system doesn't really exist for art, which is what we've created. On the marketplace, we've applied heavy curation with the idea that what you will see there has implicit potential in the sense that we've selected it as high quality kind of works that therefore tend to do well in the market. And then we apply technology, which Diana will go into even more, in the sense of applying blockchain to help improve the market as such, help improve things like transparency and tracking of the works. So then how is buying art maybe made better with a platform like Artscapy? So we have the curation, which implies the quality control, kind of safe buying in the sense of how we look at the works that we propose. And then the kind of dedicated tools that we have there. So personal account management, if you're looking for a certain work or interested in getting into the art market purely for these kind of reasons, now in a world where it's hard to find anything that even stores value at this point, art can be a good option. And then we are happy to help also source those kind of works there. So this gives just a quick primer on what we're doing, why investing in art can be an interesting outlet. Again, it comes with a lot of caveats, but it might be just a good asset class to get into to store value and also to bring personal fulfillment and enjoyment. As I put here, happy to connect with anyone after the conference, and also specifically if there are other thoughts or questions, perhaps related to venture capital, investing in early stage. So what I was doing there was a sector agnostic tech investing. So across a wide array of different types of startups. So everything from VR, consumer goods to marketing technology and the likes. So if there are questions on that, happy to take that as well, on top of course, thinking about art as another alternative asset. But I'll leave it there, conscious of the time. Thank you so much again for having me at this conference, and happy to take any questions.
Thank you very much, Emilia. So there's something I would like to ask you, and it is,
Sure.
what is the most important thing for a venture capitalist, in your opinion?
Most important in what sense? What to focus on, or in what sense?
Let's say focus and strategy.
So it depends on so venture capital tends to have its investment criteria. They have an investment thesis, so they tend to focus on either certain sectors or a certain stage, depending on what they're after. So you have also in the UK, you have specific kinds of tools to get into to investing. So one can be investing using EIS or SEIS, which are tax incentives. So there are funds that are focusing just on those kind of stage of companies. So from my point of view, I was investing early stage. So in venture capital speak, that would be sort of pre-seed to the seed stage. We weren't investing in institutional level yet, so kind of your Series A and B and C and so forth. We were investing early stage with a caveat that your ticket investment obviously gets you a higher equity stake, which was our main goal at the time, to get in early and support the founder and support their business throughout their lives, basically. So it's hard to answer that question without any further, let's say, specifics to it. It depends what's the strategy of the fund. If you're investing yourself, it would probably, if you're joining a VC firm, of course it makes sense if you've had experience in those fields before, or if you've maybe run a project or worked in that kind of sphere that they're investing in prior. But still having just an understanding of the kinds of tools that goes into VC will help a long way. And starting to study, if you want to get into VC, I would recommend also looking at the different VC firms and understanding what is their thesis, right? So what do they usually invest in, what kind of fields, and starting to scout and understand why they pick those kind of startups. So yeah, if you have any other like specific follow-ups, I'm happy to take those. Otherwise, see then another question as well.
Okay, thanks, Emilia. Yeah, we can move forward with a question from another person, which is, how do you choose art pieces for your platform?
Yeah, so this is a great question. So what we've developed is a big, let's say we have a big selection criteria that helps us decide what kind of art we choose to put to the platform. So we have a whole board of art advisors and people who help set the stage for what the kind of art we bring on the platform. So that means we have this board, they help us to run through the selection criteria, and we also rely on a lot of our professionals in the team. So when I say also our selection criteria, basically we built out a whole matrix of looking at, we want to bring in the kind of galleries and the kind of works where the artist has potential. So that can mean a lot of things. So have they been in institutional collections? Would they have been in, you name it, let's say, call it Tate or the Museum of Modern Art, for example, other kind of institutional collectors, known private collections, auction results. So all these kind of things weigh in to help determine some of the value or the place of artists and artworks. That's why I was trying to caveat as well that it's unlike another, let's say, financial assets where you have a bit more quantitative things that you would be looking for. So in terms of startups, you have a few pointers that you tend to look at to assess their value. It's harder to do that in terms of art and thinking of art as an investment. But that's why we're trying to help do those things through Artscapy in kind of an implicit way. So what we believe in is the value of the art and their potential within the art market, let's say, or in the art world to make a difference or add something to the art production.
Understood. Thank you very much for your answer. So I guess there are well, we have one last question. Why invest in art is if not for receiving returns, as you said?
Yeah, so what I mean there is the caveat to say that don't expect returns fast. So art isn't something that is easy to invest in for a short-term growth. So to see meaningful kind of growth, it can take years. Some artists, of course, have faster trajectory than others, but it's hard to buy. So it's hard to, even if I told you now, okay, or you thought, this, let's call it a Banksy piece, has a lot of market potential. His prices were rising quite a bit in the past. It's hard to even get in to buying a piece at the right time. It's like imagining the stock market, but you couldn't just go in and buy Apple if you wanted to. Like, even if you knew, okay, I think Apple's gonna rise in value, still being able to even access it is a bit tricky. And then the market is illiquid. Still, having said all of these things, art tends to rise in value. Not all the time, which is why I'm saying, caveating it, if you're buying art with the sole focus of investment. There are art funds that are doing this with this kind of purpose. I think art can be a good investment in the sense of buy things that you like, research the pieces or the artist, look at their trajectory, look at things like auction results, have their values been increasing. And indeed, on Artscapy, what we do is we also track the value of the collection over time. So you can actually see, we pull in different market measures to see how the value has changed. So getting into this kind of thinking helps to set up a proper perspective of looking at art. I see. Okay, just let me answer this very quick. Do you help artists to become popular so their pieces cost more? No, we don't. We don't promote as such. We leave this to the gallery. So also there, it's to try to do the kind of pump and dump strategy that you see in like startup investing is quite difficult to do as a private person. There can be different people bidding on things in auction, of course, but it's a bit trickier as such. And we don't, as Artscapy, we're considering ourselves more as a tech platform. So we help collectors and people who are interested in buying art having access to the right tools and the right kind of information. We're not promoters of artists themselves.
Okay, thank you very much, Emilia. We appreciate your time. Hope you have a good rest of the day. And moving along with our conference, please welcome the last but not less important investment.
Thank you so much.
You're welcome. Yeah, have a good rest of the day. Okay, so as I was saying, we're on the final stage of our investment conference for today. We're going to talk about NFTs, which allows its buyer to say that they own the original copy of a physical art or the master file of a music recording, as an example. So, what should you know about art to provide you with the enjoyment of owning a piece of history and a passive income? So, Diana Kocheva, which is a business development manager at the Thirdblock, the London startup, knows the answer to the question. Diana, welcome, and thank you very much for joining us today.
Thank you so much for having me.
You're welcome.
Yeah, I'm really excited to share my knowledge. And long story short, I guess I was the one who needs to make this topic. And my point here is to tell you why it's a great idea, actually. So let me share my knowledge.
Great, thank you.
Okay, let me know if you can see my screen.
Yes, we can see your screen.
So first I'll try to introduce myself. So I'm Diana, I'm Ukrainian, and I was all my life art collector. So that's why I'm super passionate about art. But around 10 years, around decade, I was always involved in tech. That's how I became blockchain enthusiast, and like for 5 years working in this sphere.
And I'm also running business development and Thirdblock company. What we are doing, we are basically digitalizing culture sector and cultural foundations and institutions. So I'm here to answer your questions, like, can you really invest in NFTs, and what are exactly are they anyway? Like, how can someone spend, $69 million for this image, for example? So for like any kind of investment, you need to understand what is this thing before investing it. So what is actually NFT, and it's non-fungible token. So let's break down, and we see here $100 that can be easily replaced with another $100. But we also understand that with this Da Vinci masterpiece, it's only one in the world, so it can be easily fungible, and most tokens on blockchain, they are actually fungible. So it can be interchangeable, and each token represents exactly the same number and exactly the same transaction that you put there. Long story short, I'm always saying that it's more about like digital certificates of ownership. All NFTs allows the user to create like a unique string of data on the blockchain. So for example, if I would buy this gift, uh, Nyan jacket, and I wish I would buy it, I would like have such opportunity to buy it, I would just put, Diana Kocheva owns the original Nyan cat. By the way, it was sold by $600,000. So if long story short, NFTs are digital certificates of ownership. They can be used for like deeds to car, legal documents, event tickets, collectibles, and even real estate. But NFTs are especially a big deal for digital artists because it allows them to mint an original. There are a lot of talkings about NFTs these days, or about crypto that is like going down. But still, even with that bad press, we can see that the market is growing, and it's really huge. And it's easy to see why people are concerned about it. But still, we only see positive impact on the NFT market. Uh, when someone is, hearing NFT, what they think it's about, of course, artworks. That is like really obvious. But I'm here also to explain that there are more variety of different types of NFTs, and I will also try to make a really short example for each. As I already mentioned, artworks, they're the most popular category there, and they're mainly digital artworks that come with a public certificate of authenticity and ownership issued by the digital ledger on which they are stored. They're also collectibles. So they are first type of NFTs to be ever launched. So it's actually started from collectibles, like Pokemon cards or vintage mint condition toys, but in digital form. Sports memorabilia, it's one of the hottest NFT topics these days. I'm based in London, so I was really surprised that even like pretty much all big soccer teams right now, they even have their head of digital innovations. So they basically have their tech team to work on those NFTs. Video game assets. So it's really like NFT based video games that players get involved in to win rewards like cryptocurrency, digital assets. Yeah, so there's a lot of really big examples, and I can see that very popular among video game players are like CryptoKitties, Gods Unchained, Sorar, and with gaming industry, like it's basically growing by itself, but it's pretty much working really good together. Virtual land, oh, it's a really hot topic these days as well. It includes land in video games as well, and metaverse. I'm a big Web3 and metaverse fan, so right now also trying to uh, digitize all these things and to look through them deeply. It might seem like an extremely redundant asset with like real no word applications, but it has a really great potential. we can see that the virtual piece of land can be used to place advertisement inside video games. It can also create virtual assets. Memes, a few years ago, no one could imagine that you can make money with them. Like there's like no financial value attached, but amidst there's like huge NFT wave, and it also became valuable digital asset. For example, Nancat that I showed you before, it was sold like for around $600,000. My favorite, like Disaster Girl, was sold for $470,000. So we can see that it's spreading, and the price is valuable, so it can become really valuable asset as well. Domain names, it's also a new topic these days. There are crypto domains minted on blockchain, for example, like Binance Smart Chain or Ethereum. They have over 500 different the most sought after which is like Ethereum. Crypto domains do not depend on any centralized authority and hence are coveted as. Moreover, they can also be used to link crypto wallets, which is not a feature in non-FT domain names. The biggest shortcoming of crypto domains is the fact that a majority of browsers do not support them as of now. But for the future, it may become even like more popular. So we're still figuring this out. For music sector, I can see that it also brings a lot of new opportunities. It's like newest phenomena in NFT mania. Artists are doing pre-releases on NFT marketplaces before releasing in traditional streaming platforms. Kings of Leon, it's like the band where like in a week I will go to the concert. They were the first one who like sold multiple NFTs in March last year, and they became kind of like first one in industry, and right now everyone is also trying to jump into this wagon. Ticketing, it's actually onset of NFT that has introduced like various innovation in the way day-to-day transactions, and we can see that it applies to different sectors. And tickets for events can be minted now on blockchain platforms and then can be actioned of by the organizers. NFT tickets can also be sold at a fixed price. What I can see, it can significantly reduce forgeries and add a sense of memorabilia, because these tickets can also be stored and resold as memory. Real world assets, till this point you might be wondering that NFTs are only associated with digital and virtual assets, but NFTs has also applications related to real world assets as well. Like it's a token that actually signifies virtual ownership of a physical object, just like digital NFTs, the token attached to this special NFT that proves ownership as well as establishes legal contracts of warranty, insurance, and it became really a good tool for actually jurisdictions and showing authenticity of the object. In NFT fashion, every day we see big names who are using it, and first idea was like, how can someone do this thing? But what I can see during last year is like moving, and virtual fashion includes clothing and accessories for digital avatars and video games characters. Not only Louis Vuitton is working on it these days. We even like had project with Dior, but we also see such guys as Meta that are doing it. So it became really popular these days, and I'm pretty much sure that, let's say in 1 year, even us guys will use it. Identity. So NFTs have started gaining significant real world traction because of their non-fungibility and the added assurance of transparency from the digital ledger. One of the real world applications of NFTs is providing identification certifications to individuals, like self-sovereign identity and breach protocols. There are like some examples of utilizing these NFTs. And last category, it's like category that includes anything and everything, which has not been covered in former categories. Every day it's like bringing shocking news, but what we can see that you can imply it, this technology everywhere. So NFTs are broadly associated with digital as well as virtual assets, but with the recent leaps in technology, newer real-world applicants of NFTs have also been created to make transactions more transparent and secure. As Emilia already mentioned, like art market is also going pretty good these days, but it's still a risky asset. Here I'm trying to answer and to highlight the difference between buying NFTs and traditional art. Well, when you're buying a painting or a sculpture, you kind of need to take it physically with you. The painting is of one kind, so you're the only person who has it. It's a digital asset, so you can and in NFTs, it will be a digital asset, and you can have it anywhere, and it will be always, in your pocket or where you want to take it. But there's also different types of art. For example, generative became really popular these days, and it's actually generative art NFT collections that are made of a set of unique digital artworks released by an artist or a group of artists, with each collection consistent of limited number of minted NFTs. I usually see it actually collaboration between an artist and an autonomous system, even like technology. So for tech geeks as me, it became perfect collaboration between art and tech. Here you can see our crypto crashers that we have built in Thirdblock, and this NFT collection was created by us, and it has really a commercial success to all parties, so we are really proud of it. Uh, Again, what you can see on market for art in NFTs, you can see a lot of big names. For example, Takashi Murakami. It's great example maybe how you don't need to make NFTs if you're an artist itself. For example, this guy 1 week ago in his tweet, he made officially tweeted that he's sorry for all the investors who was buying his NFTs. Right now they really lost their price maybe like 8 or 10 times. So as I'm always saying, in any kind of investment, make research first. Museum art, and this is something I truly believe myself and promoted among everyone. Here at Thirdblock, we are digitalizing cultural institutions and helping them to make live projects, like selling additional digital replicas of priceless masterpieces from their collections as NFT. We are working with cultural heritage that you can't actually easily, you know, port or send to another country because of some rules and regulations, but you can buy a digital asset that will grow with the price. And we were working with Dali Universe, with Michelangelo Foundation, so with some really big names that everyone in the world knows it. And usually I suggest to start with them first. Curatorial art, it's one more example of good investment, because even someone who's professional from art sphere, they're already picking up the best works that is usually related to one topic. For example, this weekend we're starting making exhibition with South Korean digital artists who are working also in the NFT sphere, and all of them have really different vision for the world, and it's all related to one theme. So why you need to choose NFT? First, as I already mentioned, you can always have it with you, and you see my picture. It's was in my apartment in the heart of Kyiv in Hrychatik. Behind me, there's signed collection books. I had really big art collection, but here I'm in London without them, and I have no idea when I will see them again. So as you see, NFTs worked pretty much better just because you can have it everywhere, and it will be just in your mobile phone or in your digital wallet. anyone can invest in. Again, traditionally, the art market has evolved to be super exclusive with high entry borders due to necessary knowledge and investment size. But now with NFT, we're seeing how it's democratizing investment in art, or such platform as Artscapy is also helping it. Secured by blockchain, it's also helping you to know that you bought original and you actually have it, so no one can steal it from you. And easy to support artists. One of the greatest tool what I see in NFTs, it's patronage. I'm promoting also to my friends, like, please buy art from a live artist, not from that. In NFTs, you can support your favorite artists, creators from all over the world very easily. And number one advice how to choose like NFT, just choose something that you really like and you're passionate about. According to for those collectors, the appreciation of art was the most important factor. So like 90% of all NFT collectors, they're still choosing the vision, the aesthetics, or the topic that they are passionate about. But still there are some people who are thinking about just quick investment, and unlike NFT collectibles, which often come with like added value through incentives, art NFTs come primarily with an instinct value based on their aesthetics and artistic significance, and it's something that I would suggest to go with. So that's pretty much it. You can pin me with like for more questions, and please feel free to write us. Yeah.
Thank you very much, Diana. We appreciate your time. I do have one question. So, what are the main things that should we consider before buying an NFT?
Yeah, as I mentioned before, so first thing will be still just choose something that you're really passionate about or like. Think about what you were collecting, let's say in the past, or industry where you work in, or your hobbies. Maybe it will be related to this. Second thing, do research. If these artists have like successful exits or collaborations, or it has also like good portfolio in international exhibitions, yeah, it can be also a good sign.
Okay, thank you very much. Next question is the price for NFT mostly connected with the popularity of an artist?
Yeah, that's true. Actually, it's like NFT price always depends only on the value, and the value depends on target audience of like potential clients for whom it can be valuable. So it's always a question of chicken and egg, and yeah, the more community an artist have, there is more chance that his NFTs will be more valuable in commercial side.
Understood. Thank you very much. Well, so I think we don't have any more questions for today. So thank you very much, Diana. Have a good rest
Yeah,
of the
thank you
day.
for having me.
You're
You
welcome.
too. Thank you.
Okay, guys, so that was all for today. Thanks everyone for your attention. We're really grateful for your attention and very grateful to Party.Space for having such an incredible platform. So, you guys have 20 more minutes to walk around the rooms to talk to participants and speakers. So, make sure you enjoy this time. It's been an honor to be among such a motivated and smart audience and to be able to present investment opportunities to you all. So we wish you the best, and don't forget to check on Innovecs opportunities around the world. Thank you very much, and have a good rest of the day and weekend. Take care.